Students, welcome you all once again in the second class of FR for this batch. So students, yesterday we have discussed about what is IFRS, what is International Accounting Standard, and how this Ind AS are derived from IFRS, right? We talked about that. Then we talked about the applicability and roadmap for implementation of Ind AS in India. And we discussed that there are 39 Ind AS. So today we are going to talk about Schedule 3, right? So officially, the lecture is on Ind AS 1, and Ind AS 1 talks about presentation of financial statement. So as far as yesterday lecture is concerned, we were supposed to cover introduction to Ind AS, roadmap and applicability to various entities, and division 2 of Schedule 3. So we have covered the first two parts, introduction to Ind AS, roadmap and applicability to various entities, but we have not covered division 2 to Schedule 3. So today in the first half, we will be covering division 2 to schedule 3, and then we will start Ind AS 1 presentation of financial statement. If I talk about presentation of financial statement in IGAP, in Indian GAAP, when we were preparing the financial statement, schedule 3 was the only authority or only source which was talking about your format of financial statement. But in Indian accounting standard, in addition to schedule 3, Ind AS 1 is also required when you are preparing the financial statement. That is why the title of Ind AS 1 is presentation of financial statement. And what was the title of AS 1? It was only disclosure of accounting policy. AS 1 was not talking about financial statement. It was only talking about disclosure of accounting policies. But Ind AS 1 talks about presentation of financial statement. So my dear students, whenever you are auditing Ind AS financial statements or when you are preparing Ind AS financial statement, two sources are very important for finalization of Ind AS financial statement as far as presentation is concerned. What are those two sources? One is Schedule 3 and the second one is Ind AS 1, right? So right now we are starting Schedule 3 and then we will be starting Ind AS 1. Is that clear to everyone? Yeah. I can see Nidhi has joined, Namrata has joined. Good morning once again to all of you guys. Yes. Student, Schedule 3. What is Schedule 3? And Schedule 3 provides, what Schedule 3 provides? So Schedule 3 is a schedule which is given under Companies Act 2013. Schedule 3 provides the format of financial statement. Format of financial statement, right? It provides the format of financial statements. Is that clear? And Schedule 3, let's discuss about Schedule 3. Schedule 3. Schedule 3 is covered under, it's a part of Companies Act 2013. Companies Act 2013, which provides format of financial statements. Format of financial statement for which entities? So it is part of Companies Act. So only for companies. Format of financial statements, right? Okay. Now, how many divisions of Schedule 3 are there? There are three divisions of Schedule 3. There are three divisions of Schedule 3, right? As far as format of financial statement is concerned, the first one is Division 1. Division 1, right? And what is this Division 1? This Division 1 talks about, financial statement under IGAP, under old accounting standard. Whenever the company is preparing the financial statement under old accounting standard, then Division 1 will be applicable, right? So Division 1 is applicable where the company is preparing financial statement under accounting standard, which means under IGAP, right? As we have discussed yesterday, that insurance companies, banks, right, SME, small and medium enterprises company or companies whose net worth is less than 250 crores, and these companies are not part of the company where Ind AS has already been implemented, right? because we have discussed that if Ind AS is applicable to any company, then it will be applicable to its holding, subsidiary, joint venture, and associates. For example, DLF Group. Have you heard about DLF Group? So DLF is a big real estate company, and DLF has so many small subsidiaries, joint venture, and associates, which is known as SPVs, right? So those small subsidiary, joint venture, and associates probably have a net worth of rupees 1 lakh, 5 lakh, 10 lakh. So in these real estate companies, they are creating a lot of small entities, right? So even these entities are very small, private limited company, still Ind AS is applicable to them. Why? Because they are subsidiary, oblique joint venture, oblique associates of a company on which Ind AS is applicable. So DLF is a big real estate company. It's a listed company. So on DLF, Ind AS is applicable. That is why Ind AS is applicable to all the subsidiary, joint venture, and associates of DLF Limited, right? But otherwise, if there is a standalone company which is not part of any group, big group, so on those companies, if net worth is less than 250 crores, then there is no requirement to implement Ind AS on those entities. So those entities will prepare their financial statement as per old accounting standard, because old accounting standard are comparatively smaller, comparatively easier, and comparatively less complex, right? From the counting purpose, there are 27 accounting standard, but as far as Ind AS is concerned, there are 39 Ind AS. As far as IFRS is concerned, there are 40 IFRS. IFRS includes IAS as well, right? So friends, Division 1 is applicable for the companies which are preparing their financial statement under accounting standard, right? And this Division 1 was introduced. Division 1 was notified on 26 March 2014, right? Your Companies Act 2013 was notified and applicable with effect from 1st April 20, which year? 1st April 2014 or 1st April 2013? Yeah. So this Division 1 is applicable from 26 March 2014, right? And this Division 1 was subsequently amended on 11 October, amended on 11 October 2018, and again amended on 24 March 2021. 24 March 2021, right? So this is about Division 1. Sir, are we supposed to read Division 1 in CA final? No, you are not required. From the CA final perspective, it is not required. But if you are doing your articleship training, you are preparing the financial statement or auditing the financial statement under Indian GAAP, then of course, from the practical purposes, it is required, right? But from CA final perspective, financial reporting paper perspective, it is not required at all. Now let's move to Division 2. Division 2. Division 2 to Schedule 3. This Division 2 to Schedule 3 is required on the companies which is following Ind AS, right? So Division 2 is applicable to those entities which are following Ind AS. And these entities should be other than NBFCs. Means on NBFCs, this standard is not applicable. This Division 2 is not applicable. So on Bajaj Finserv Limited, Muthoot Finance Corp Limited, right? Bajaj Finance Limited, Shriram Finance Transport Company Limited, HDFC Limited. On these companies, Division 2 is not applicable. But on Reliance Industries, Adani Group, Larsen & Toubro, Nestle, ITC, Bharti Airtel, right? On these companies, Division 2 is applicable. Why? Because these are non-NBFCs. These are not NBFCs, okay? So Division 2 is applicable to the companies on which Ind AS is applicable, and these companies should be non-NBFCs, right? This Division 2 was notified on 6 April 2016. So the notification, MCA notification, dated 6 April 2016. This division 2 was also amended on 11 October 2018, and it was subsequently amended on 24 March 2021, right? Is that clear? So this 24 March 2021 was very important amendment. It was a very major amendment, right? Then come to the last one, division 3. What is division 3? This division 3 is applicable to the NBFC companies which are following Ind AS, right? For example, there is a small private limited NBFC company whose net worth is less than 250 crores, right? And that company is preparing its accounts, of course, under old accounting standard, under GAAP. So which division will be applicable for the format of financial statement of that NBFC? Whether division 1 will be applicable or division 3 will be applicable? What is your answer? What is your answer? So Radhika is saying that division 1 will be applicable. You are right, Radhika. So a NBFC company which is following accounting standard, not Ind AS, on that company, division 1 will be applicable as far as format of the financial statement is concerned, right? So division 3 is only applicable to that NBFC which is following Ind AS. Is that clear? Okay, very good. So this division 3 to schedule 3 was notified on 11 October 2018. 11 October 2018, and it was subsequently amended on 24 March 2021, right? So this 24 March 2021 date is common in all these divisions. So friends, from the understanding perspective, from the CA final curriculum perspective, from your study material perspective, division 2 is applicable and division 2 is important to understand, right? So we will be touching, we will not be covering in detail, but of course we will be touching the entire important part of division 2 to schedule 3, along with the major amendments which came on 24 March 2021. I believe you all are comfortable with the context of schedule 3. Now you have understood that schedule 3, the name is schedule 3. This schedule 3 has 3 divisions, right? Will you be able to remember? If someone will ask you in your interview, or someone will ask you that how many schedule 3 are there, or how many divisions of schedule 3 are there? So schedule 3 has 3 divisions, right? Division 1. So what comes first, AS or Ind AS? AS comes first, right? So that is why division 1 is for AS accounts, of course, for companies. Then Ind AS came, but Ind AS came for non-NBFC first, then Ind AS came for NBFC, right? For non-NBFC, Ind AS was notified on 16 February 2015. For NBFC, the applicability was decided on 30th March 2016, right? So for non-NBFC, Ind AS came first. So that is why division 2 is applicable for non-NBFC companies which are following Ind AS. Then at the last, NBFC came. So that is why division 3 is applicable to NBFC companies which are following Indian accounting standard. I hope you guys are able to remember this thing, right? Will you be able to remember this thing? Division 1, 2, 3, and of course division 1 will be applicable to AS, division 2 and 3 will be applicable to Ind AS, 2 will be non-NBFC, 3 will be NBFC. Very good. Great. Yeah. So friends, as we have discussed, preparing, presenting and auditing Ind AS financial statement, division 2 to schedule 3 along with Ind AS 1 is highly critical and important to understand, right? In our older days, when we were preparing financial statement as per GAAP, as per accounting standard, in that case, AS was not relevant. Why? because there was no any accounting standard which talks about the format or presentation of financial statement. But in Ind AS, there is a specific one standard which talks about the presentation of financial statement, right? So now two things are important for preparation, presentation, and auditing the financial statement. What is that? Division 2 to Schedule 3 and Ind AS 1, right? Friend, financial statements are prepared, or financial statement are consist of 5 elements, right? What are the element of financial statement? Can anyone tell me what are the element of financial statement? What are the elements of financial statement? Elements of financial statements. Can anyone tell me? You name anything in the commerce, and that thing will be covered in these 5 elements of financial statement. For example, Namrata will say, sir, I have paid cash to my driver. What is cash? It's an asset. And paying cash to driver for let's say driver salary, what is that? That is an expenses, right? Avinder will say, let's say, sir, I have deposited 50,000 rupees in my bank account. What is cash in bank? Cash in bank is asset, right? Anup, I am talking about element of financial statement. Element of financial statement is not balance sheet, cash flow, and notes. So Vidit and Suresh, it is not balance sheet, cash flow, and notes. Namrata, you are right. It is asset, liability, equity, income, and expense. Globally, there are 5 elements of the financial statement. And when I talk about financial statement provides you two things: financial position and financial performance, right? Your balance sheet, your P&L, your cash flow. Your cash flow is a movement of cash between the balance sheet and P&L, right? Your notes to accounts are also elaboration of your balance sheet, P&L, etc., etc., right? So friends, coming to the elements of financial statement. For balance sheet, there are 3 elements: asset, liability, and equity. There are 2 elements of P&L: income and expenses, right? So there are 5 elements of financial statement: asset, liability, equity, income, and expenses, right? This asset, liability, equity are balance sheet elements. Income and expenses is P&L elements, right? Now, what Suresh and Vidit has told, that these are the component of financial statement. What is the component of financial statement, and where this component of financial statement is defined? Component of financial statement. Friends, please remember, this component of financial statement is defined under Ind AS 1. What are the components of the financial statement? The component of the financial statement is balance sheet, statement of profit and loss. It's a P&L account or statement of profit and loss. What is the right word? What is the right statement? It's a statement of P&L or profit and loss account. It's statement of profit and loss. You're right, Rohan. It's statement of profit and loss. It's not a profit and loss account. It's statement of cash flows or cash flow account. You're right, Saurav. It's statement of cash flows, not cash flow account. Statement of cash flows, right? Is that clear? Very good. So friends, whether it is statement of profit or loss or statement of profit and loss, what is that? Is it profit or loss, or is it profit and loss? What is the right word? What is the right word, guys? It's a statement of profit and loss or a statement of profit or loss? What is the right word? Please tell me. What's the right word? You all are doing your articleship training. You must have seen the financial statement. Statement of profit or loss or statement of profit and loss? I'm waiting for your answer. Is it or it? So it is not or loss, right? It is and loss, profit and loss. If loss will be there, of course it will come into your P&L. If profit will be there, of course it will be come into your P&L. And in one set of statement of profit and loss, because it consists of comparative period also, there could be a profit, there could be a loss. Okay, is that clear? Very good. Mukta, Nidhi, Suresh, Pungori, and Panu, Kishore, Mayank, Janvi, Sayed, Shankar, all, and Anup, everyone has given a right answer, right? Everyone has given a right answer. So Namita and Mr. Namita and Pavni, it is not or, it is and, right? I hope you have got it. Great. You need to, you need to remember, you need to understand, you need to be very careful when you are writing or when you are checking your financial statement or drafting your financial statement, right? Let's come on PPT now. Friends, component of financial statement includes your balance sheet, right? As far as balance sheet is concerned, the format of the balance sheet is given under division 2 to schedule 3, as well as the guidance on the format of balance sheet is given under Ind AS 1 as well, right? So I will write here Ind AS 1 as well as schedule 3, right? Whenever I'm saying schedule 3, it means division 2 to schedule 3. I'm talking about division 2 to schedule 3, right? Second, statement of profit and loss. Statement of profit and loss, right? Statement of profit and loss. The format of statement of profit and loss is given under schedule 3 as well as it is given under Ind AS 1 also. So Ind AS 1 has not given a format. It gives what should be the minimum line item on the face of balance sheet, on the face of P&L. It provides a guidance, right? For example, in balance sheet, your every item has to be classified into current and non-current. You all understand current, non-current? You all have seen the balance sheet, which includes current and non-current. Am I right? I believe you all have completed your articleship at least for 1 year, 2 year, right? So you have seen the balance sheet, which is classified into current and non-current. So friends, schedule 3 also provides a guidance on current and non-current, as well as Ind AS 1 also provides a guidance on current and non-current, right? Statement of profit and loss. The guidance is given under Ind AS 1 as well as the format is given under schedule 3. So Ind AS 1 and schedule 3, right? Third, a statement of changes in equity. Statement of changes in equity. What is statement of changes in equity? It's a new statement, right? So this statement was not there in our old IGAP accounts, right? Old IGAP financial statement. But we were doing this work. Statement of changes in equity is nothing. It's a movement of share capital and movement of reserves and surplus, right? But in Ind AS accounts, it's a complete statement. Sir, why you are calling it as a statement? I am calling it this as a statement. Why? Because like a balance sheet, like a P&L, this statement of changes in equity is also required to be signed by statutory auditor as well as board of directors, right? And the management. Is that clear? But in IGAP, the movement in share capital and the movement in reserves and surplus were only provided in the notes to accounts. But in Ind AS, this is a separate statement. I will show you a real life example of that as well, right? Statement of changes in equity. This format is given under schedule 3 and the guidance is also given under Ind AS 1, right? Number 4, statement of cash flows, not cash flow account, statement of cash flows. Statement of cash flows, and you all are aware, operating activity, investing activity, financing activity, right? So statement of cash flow format or guidance is not given in the schedule 3, right? So I'll write new here in statement of changes in equity. It's a new statement. So friends, as far as statement of cash flow is concerned, Statement of cash flow is not covered under Ind AS 1 as well as it is not covered into Schedule 3, right? A statement of cash flow, the guidance on statement of cash flow is only covered under Ind AS 7. Okay. You will not find the format or any guidance on preparation of cash flow statement in your Schedule 3 or in your Ind AS 1. When you go to Ind AS 1, it defines your component. So whenever you come to statement of cash flow, Ind AS 1 says that you have to go to the window of Ind AS 7 to understand the cash flow statement. So Ind AS 1 is just referring Ind AS 7 as far as cash flow statement is concerned. Is that clear? Notes to account. As far as notes to accounts are concerned, of course, notes to the financial statement partially in the notes to the financial statement partially the relevant notes is given in the Schedule 3 and the notes are also given under all the Ind AS, right? For example, related party disclosure. You will not find related party disclosure schedule in your Schedule 3, but you have to refer Ind AS 24 for related party disclosure. Are you getting me? So this Ind AS 24 related party disclosure you will not find in Ind AS 1. You will not find in Schedule 3, but where you will find in Ind AS 24. Contingent liability, capital commitment, you will not find in your Ind AS 1. You will find in your Ind AS 37, right? Have you understood? So notes to accounts are partially given in Schedule 3, and Schedule 3 say that any disclosure, any notes which is required as per the relevant standard, as per the relevant Ind AS, it is required to be disclosed. For example, employee benefit expenses. In your P&L, one line item is employee benefit expenses. As far as employee benefit expenses concerned, the breakup is given in the Schedule 3. For example, Schedule 3 says that in employee benefit expenses, you have to provide a breakup between salary expenses, contribution to provident fund and other statutory funds, staff welfare expenses, right? So the breakup is there. But in Schedule 3, your actuarial disclosure, you understand actuarial disclosure, gratuity, leave encashment. So actuarial disclosure is not given in Schedule 3. Schedule 3 only says that you have to refer Indian accounting standard for the relevant disclosures, right? When you go to Ind AS 1, in Ind AS 1, this actuarial disclosure is not there. Ind AS 1 says that in your notes to accounts, you have to provide the notes to accounts for all you have to provide the disclosure for all the relevant Ind AS which is applicable to your entity. So where actuarial related disclosure are given, it is given in Ind AS 19. Ind AS 19 talks about employee benefits. Is that clear? So notes to accounts partially given in Schedule 3, right? So all Ind AS standard, all Ind AS and Schedule 3 because there are some specific notes which are given in Schedule 3. So friends, have you understood this thing? Have you understood this thing? As far as statement of profit and loss is concerned, there is a new concept in statement of profit and loss. The statement of profit and loss is much larger, much bigger in comparison to old P&L, right? Old P&L. Okay. So what is that? It includes other comprehensive income, including other comprehensive income, OCI, which we are going to read, which we are going to see in our Ind AS 1 lecture. I hope it is clear to all of you, friends. I hope it is clear to all of you. Is that clear or it is not clear? Please tell me. Is that clear? Clear, not clear? I am waiting for your answer. Clear. Okay, good. Friends, before starting this, let me show you one balance sheet, practical balance sheet. Then I'll come to the other part of Schedule 3. Please let me know if the balance sheet is visible, guys. Just give me a second. I am opening this balance sheet. Can you see this balance sheet of Hindustan Aeronautics Limited? I hope it is visible. It is there on the screen. Hindustan Aeronautics Limited. Is it visible? It's a public sector undertaking, listed company. Rohan, is it visible? Radhika, is it visible? Okay, are you able to see this balance sheet of Hindustan Aeronautics Limited? Okay, great. Let's go to the component of financial statement, right? Component of financial statement. Yes, you can see there is a standalone balance sheet is there, standalone balance sheet. So your no, it starts with asset side, then your liability side. In Ind AS, it starts with asset side. Okay, so balance sheet is there, and this balance sheet, you can see it is signed by the auditor and the management board of directors. Then statement of profit and loss is there, right? You can see 1 year comparative is there. So revenue, other income, expenses, profit before tax, tax, profit after tax, and then you can see a new part which is other comprehensive income, right? Other comprehensive income. This P&L is also signed by management and board of directors. This is the auditors and board of directors. Then we have statement of changes in equity. You can see this statement of changes in equity where your equity share capital and notes to accounts, right? Your reserves and surplus, sorry, notes to accounts, reserves and surplus. Reconciliation is there, reserves and surplus. Reconciliation is there, right? And you can see that this is also signed by the management and the auditor, right? You can see this statement of changes in equity is signed by the auditor and board of directors, right? Then there is a statement of cash flows. This statement of cash flow is there where operating activity, investing activity, financing activity is there. This is also signed by the auditor and board of directors. And after that, there is a significant accounting policies and notes to accounts, right? Is that clear? These are the 5 components which we have discussed. I have shown you statement of changes in equity. I have shown you other comprehensive income also in the profit and loss account, statement of profit and loss, right? I hope it is clear to all of you, friends. Is that clear? Is that clear, friends? I just shown you one balance sheet, right? Right. Namrita, what is your question? Okay. So let's move on. Let's discuss. So I have some questions, right? Where we will be covering the entire universe of Schedule 3, Division 2 to Schedule 3, which is required the CA final student. Okay. Understanding the universe of Schedule 3. Right. I have total 17 questions, and in these 17 questions, I would say you will be able to understand all the requirement of Schedule 3, even from your interview or interview perspective or practical life perspective as well. Okay. Let me see if Namrata has some question, then I'll move on. He's asking, sir, actuarial disclosure means, Namrata, for example, a company which is giving gratuity. Right? You understand gratuity, leave encashment, right? So if a company has 1,000 employees, company has to recognize the liability of gratuity, but gratuity is always payable on the retirement or on the termination of an employee, right? On the termination of employee. So basically, for calculating the liability with future liability with respect to gratuity, we need to get the valuation done. Okay, valuation. And who will do these kind of valuation? These kind of valuation will be done by the valuer, and that valuer is known as actuary, right? Actuary is kind of a, I would say, a person who is estimating, right, that what will be the future liability, and then he will be discounting that future liability at a present value, so that he will give you the present value, the current value of the liability of the gratuity, right? He will do a lot of estimations. So he will be a valuer who is valuing your future liabilities with respect to retirement benefit plans, right? Yes. Now I will be like asking you a rapid fire kind of questions, and you have to respond quickly for that. Schedule 3 is applicable to companies only, or is it applicable to non-corporate as well? Guys, Schedule 3 is applicable to companies, or it is also applicable to partnership, proprietorship, Hindu undivided family, LLP. So Schedule 3 is only applicable to companies. It is not applicable to the companies who are following accounting standard. Division 2 is applicable to the non-NBFC companies who are following Ind AS. Division 3 is applicable to the NBFC companies which are following Ind AS. Okay. When did Division 2 to Schedule 3 was notified? Division 2 to Schedule 3 was notified. It was notified on 6 April 2016, right? Whether Schedule 3 got amended post originally notified, if yes, when and when was the major amendment happened? So Schedule 3 was notified on 6 April. Division 2 to Schedule 3 was notified on 6 April 2016, and the major amendment was happened on 24 March 2021, right? Whether Schedule 3 got amended post originally notified, yes. When was the major amendment happened? The major amendment in all the divisions of Schedule 3 was happened on 24 March 2021, right? It was on 24 March 2021. Is that clear? I hope it is clear to all of you. I can see a lot of students are giving right answers. I'm really glad to see the responses, and of course all the responses are right. Yes. So major amendment was happened on 24 March 2021, but otherwise this Division 2 to Schedule 3 was also amended on 11 October 2018, right? 9 days after the date of birth of Mr. Mahatma Gandhi ji, right? Question number 5, whether Schedule 3 is applicable to standalone financial or it is also applicable to consolidated financials. It is applicable to both, right? When you read Division 2 to Schedule 3, it says that the format of the applicability, or this Division 2 to Schedule 3 is applicable to consolidated financial statement mutatis mutandis. What is meant by mutatis mutandis? It means same thing in the same sense. Okay. So Schedule 3, Division 2 to Schedule 3 is applicable to both standalone as well as consolidated financial statement. Question number 6, whether requirement of Schedule 3 needs to be strictly followed, or if there is any requirement of Ind AS and Companies Act 2013, can the Schedule 3 requirement needs to be modified? For example, Schedule 3 has told you to disclose something in a particular manner, right? And I'll give you an example here. Schedule 3 says that if a company is doing revaluation of fixed assets, right, the company has to provide a disclosure if due to revaluation the difference is more than 10%. For example, there was a building, the value of the building was 1 crore rupees. The company has done the revaluation, and due to the revaluation, the new value, the new fair value is 1 crore 15 lakh rupees, right? So it means there is a difference of more than 10% due to the revaluation. The difference is more than 10%, right? So Schedule 3 says that if the difference is more than 10%, in that case, you have to provide the disclosure in the notes to accounts. But Ind AS 16 says that if you are doing a revaluation of fixed asset, revaluation property, plant and equipment, then whatever difference is there, you have to make a disclosure in the notes to accounts. So as per Ind AS 16, for example, the value of the building was 1 crore rupees, and After revaluation, it become 1 crore and 5 lakh rupees. So the difference is less than 10%. But Ind AS does not talk about any threshold. It says that if you're doing a revaluation, whatever is the difference, you have to provide a disclosure in the notes to account. So in this case, Schedule 3 only talking about more than 10%, 10% or more. Ind AS is not giving you threshold. So the question is, can the Schedule 3 requirement needs to be modified? So as an auditor, for example, Namrata is an auditor of a company. She went to the audit of a financial statement. So management is saying, see, Schedule 3 only talks about 10% and our value is less than 10%, will not do any disclosure. But Namrata is a expert chartered accountant. She is told, sir, if there is a requirement of Schedule 3 and there is some requirement of Ind AS or Companies Act as well. So in that case, to comply with requirement of Ind AS or Schedule 3, the requirement of Schedule 3, to comply with the requirement of Ind AS or Companies Act, the requirement of Schedule 3 needs to be modified. So you have to give the reconciliation or disclosure even though the difference is 1%, right? So it needs to be modified, okay? So you should not stick with only Schedule 3 requirement. You have to give more disclosure. Is that clear? Is that clear? Harita, it is not strictly followed. This requirement needs to be modified in line with doing a compliance of Ind AS and other Ind AS and Companies Act as well. Mukuta, it needs to be modified. Okay. Yes, Namrata, you're right. Ind AS will prevail. Janvi, you are right. Requirement of Schedule 3 can be modified. Yes, question number 7. Is a conflict between Schedule 3 and Ind AS which will prevail? So Namrata has already answered that, sir, Ind AS will prevail. Okay. Ind AS will prevail. Is that clear? Yes, Suresh. Ind AS will supersede Schedule 3 always, right? Question number 8. Whether any act or regulation require specific disclosure to be made in the financial statement of the company, whether it is required to be made in addition to those required under Schedule 3. For example, when this what I would say, demonetization, when this demonetization happened, so there was a disclosure which was required in Companies Act for some specified bank notes. Okay. Or for example, Income Tax Act requires some additional disclosure. So if any act or regulation requires some specific disclosure in the financial statement of the company, so whether it is required to be made in addition to those required under Ind AS Schedule 3, answer is yes, right? So if there is any specific requirement of any act, like when you prepare financial statement of NBFC companies, right? So you are following, of course, Ind AS, you are following Division 3 to Schedule 3 for NBFC companies, but in addition to Ind AS and Schedule 3, you are also following the requirement of Reserve Bank of India, right? So a lot of requirements were there for regarding the prudential norms of RBI. So these disclosures are required to be given in the financial statement because these act or regulation requires some specific disclosure in the financial statement. Why? Because financial statement are something which is audited by the chartered accountant, audited by the auditor. So they want that if they will put these requirement in the financial statement, it will get audited itself. The responsibility, in addition to the management, the responsibility will also lies with the auditor. That is why some act or regulators talk about inclusion of some specific disclosure in the financial statement. I hope it is clear to all of you, friends. So whether it is required to be made in addition to those required in Ind AS Schedule 3, yes. Question number 9. Question number 9. Which component of financial statement format is prescribed by Schedule 3? Which component of financial statement format is prescribed by Schedule 3? Tell me. Balance sheet format is prescribed by Schedule 3. P&L is prescribed by Schedule 3. Statement of changes in equity is prescribed by Schedule 3. Cash flow is not prescribed by Schedule 3. And notes to accounts, right? Partially. Is that clear? Is that clear, friends? Question number 10. Whether the item in the balance sheet needs to be bifurcated into current and non-current. Whether the item in the balance sheet needs to be bifurcated into the current and non-current? Yes. Is there any guidance given in the Schedule 3 regarding that? Yes. Schedule 3 also requires Schedule 3 also provides the guidance with respect to current and non-current. What is current? What is non-current? It provides the comprehensive guidance, right? It talks about that asset which is realizable within 12 months from the reporting date is known as current. Asset which is held for trading, with asset which is cash or cash equivalent, right? Or asset which is going to be realized within operating cycle. These are classified as current. So asset which are not current is classified as non-current. Okay. Same with the current and non-current liability as well. So this guidance is given under division 2 to schedule 3. Okay. Very good. I can see, and I'm very happy to see the response given by the students. I'm very happy. So far, we have more than 300 response in the last 40 minutes from the students. Great. Question number 11. What is the balance sheet, P&L and SOC format in schedule 3? So what is the balance sheet, P&L and SOC format in schedule 3? So friends, let me show you that format, right? Please let me know if the screen, if the format screen is visible to you. Although I have shown you the Hindustan Aeronautics Limited annual report, but now I will show you the format of schedule 3 as well. So I am just opening the institute study material. Okay. I believe this study material is visible. You can see the format of the balance sheet. Current year is there, comparative year is there, right? It start with asset. Your accounting standard balance sheet start with equity and liabilities, right? But your Ind AS balance sheet start with asset. Why, sir? Because it is a global format, right? Our Ind AS is the global version of IFRS applicable to India, right? So the global format of financial statement is also, it start with asset, then equity, then liability. So from as in the asset side, it is non-current asset, like property, plant and equipment, capital work in progress, investment property, goodwill, other intangible assets, biological assets, financial assets, deferred tax assets, other non-current assets, then current asset is there. Then equity and liability. You're not required to learn all these things, right? You just need to refer these things. Okay. No one will ask you in the exam, please provide the format of the balance sheet given in the schedule 3. This kind of question will not come in exam, right? Just you need to understand these things. Okay. You are not required to learn these things. Equity and liabilities. In equity, there is a equity share capital. Then the word is other equity. In Ind AS, you will find the nomenclatures are different in comparison to AS, right? In our accounting standard, we are writing reserves and surplus. When you open division 1 to schedule 3, you will find reserve and surplus. But in division 2 and 3, you will find other equity. Why? Because this is a global format. Okay. Then liabilities. Apart from current and non-current, you will find one more thing, that the assets are classified into financial and non-financial as well. You can see that in addition to current and non-current, you will find the classification of asset between financial and non-financial as well. So for the financial asset, it is required to be written that yes, these are the financial assets. For non-financial asset, it is not required to written. Okay. Understand? Liabilities, non-current liabilities, current liabilities. Okay. So this is the format of balance sheet. Now the format of statement of changes in equity. Statement of changes in equity, for equity share capital, you have to give opening equity share capital, then addition. If the company has made any right issue, if the company has issued the share capital during the year, or the company has bought back some equity shares, right? So then deletion in equity share capital, then at the end it will be the closing at the year end, right? Likewise, it has to be given for all the period, current year and comparative year. So other equity, reconciliation of reserves and surplus, other comprehensive income is required to be given. When I'm telling you reconciliation means opening plus addition minus deletion equal to closing. So opening reserves, addition means, for example, in retained earning, there is a opening balance of retained earning. Whatever you profit you have earned during the year, it will be added in the retained earning. If you have paid dividend, it will be reduced from the retained earning. Or if you have transferred to general reserve from retained earning, it will be reduced from your retained earning. Then whatever is left, it will come as a closing balance, right? So this is the format. Again, you are not required to learn this format, okay? You just need to refer these formats, understand this format. No one will ask you, please write down the format of statement of changes in equity, right? Then there is a format of the statement of profit and loss. What is the format of statement of profit and loss? So this format is pretty similar what we were already doing in our accounting standard schedule 3. This format is like revenue from operations, other income, okay, total income, then there is the expenses, which is your employee benefit expense, finance cost, depreciation, right? Then there is a total, okay. Then profit or loss before exceptional item, then exceptional item is there. Then profit or loss, here it is profit or loss after exceptional item, but before tax. So this before is not right in the study material. It should be profit or loss after exceptional item and tax, okay. Then there is a tax expense, current tax, deferred tax, okay. Then there is a profit or loss for the period from continuing operation and discontinuing operation. Then there is a other comprehensive income, which I have shown you. Other comprehensive income is there. We will discuss this part when we will discuss Ind AS 1, right? Then earnings per share is there. Then general instructions, okay, which is notes to accounts. Is that clear, friends? I just need to show you this format, okay? Is that clear? Are you comfortable so far? Are you enjoying the session? Are you enjoying the class? Okay, now let's come back to the PPT again. So what is the balance sheet, P&L and SOCI format in schedule 3? I have shown you in the study material, okay? Whether any rounding off guidance is given in schedule 3, if yes, what is the provision? Guys, any guidance, is there any guidance given in the schedule 3? So Mayank is asking, sir, is the arrangement of assets or liabilities in order of liquidity important to be maintained under within non-current or current classification as per division 2 to schedule 3? So Mayank, yes. If I talk, so it's not on the basis of order of liquidity, right? But yes, as far as balance sheet P&L is concerned, if you are preparing a balance sheet or P&L, doesn't matter it is under division 1 or division 2 or whatever division, right? But you have to maintain the sequence, right? Because in division 2 to schedule 3, the sequence is given. For example, in non-current asset, always property, plant and equipment comes first, right? Then there will be a intangible asset or capital work in progress. So you have to maintain that sequence, okay? Because this is something which is the guidance which is given by the schedule 3 of the Companies Act, right? This kind of sequence is not given anywhere except schedule 3. So you have to refer that and you have to comply with that requirement, okay? Santosh is asking, sir, but interviewer asks for schedule format. Interviewer will not ask about the schedule format. He will check your basic understanding, right? Even though if he will ask, then please tell me right from beginning to the end, every line item in the schedule 3. So you can say very clearly. So it's not like that if you have seen the balance sheet, if you have read the schedule 3, you will not be able to comment on any line item. Probably you will not talk 100%, you can talk 60, 70%, because with your 3 years of articleship experience and your learning experience of CA final, you can say that it is divided into current and non-current, then it is divided into financial and non-financial, then the asset comes first, then equity, then liability. In equity, First equity share capital is there, then other equity is there, then non-current liability, then current liability. In the asset side, non-current asset comes first, then in that property, plant and equipment is there, capital work in progress is there, intangible asset is there, you can investment property is there, you can talk about the line item. Interviewer should not be expected to tell you or ask you or grill you on the sequence of every line item. It is not expected at all. I am taking an interview of so many CA students, so many chartered accountants, right? So no one is expecting that. Don't worry about that. Yes. Okay. I have covered all the queries asked by the participant so far. So let's move on. Yes. Any rounding of guidance is given in Schedule 3? Answer is yes. Right? It is mandatory. If yes, what is the provision? Let's go to the provision of rounding off. And Division 2 to Schedule 3 says that if the total income of the company is less than 100 crore rupees, right? Total income. Total income means revenue from operations plus other income, right? For example, a company is having a 10 lakh rupees of revenue from operations, but the company is having a 90 crore rupees of interest income, right? So 90 crore, 10 lakh rupees is the total income. It is less than 100 crore rupees. So standard says that the numbers are required to be rounded off to the nearest 100, 1000, lakhs or millions or decimal thereof. For example, if the company is having a total income of 90 crore 90 lakh rupees, it is less than 100 crore. Okay. So what is the threshold? It has to be rounded off in the nearest 100, 1000, lakhs or millions or decimal thereof. So the company is having a total income of less than 100 crore rupees, but the company is having a property, plant and equipment of, let's say, 521 crore 50 lakh 20,321 rupees. This is the PPE balance. So friends, first of all, let's understand why rounding off is important, right? Have you seen the Reliance Industries balance sheet? Have you seen the Reliance Industries financial? So today I want you guys to just open the Reliance Industries Limited financial statement. Or let me show you this Hindustan Aeronautics Limited financial statement and you will tell me what is the problem and why this is important. Why rounding of provisions are important. Let me show you the profit and loss of Hindustan Aeronautics Limited itself. I hope it is visible. Please see the total revenue of Hindustan Aeronautics Limited. What is the total revenue of Hindustan Aeronautics Limited? 24 lakh 62,021 lakhs, right? If the rounding of provision would not have been there and Hindustan Aeronautics Limited will give its revenue or will give all its number in the absolute numbers, right? So you know what will be the number in this case? 24 lakh 62,021 lakhs. This is the number for 1 year. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12. This is 12-digit number. 12-digit number for current year, 12-digit number for the previous year. Right? But instead of giving this long train, they have rounded off in lakhs and they have given 24 lakh 62,021. The comma should be there. This is not a good presentation. The comma should be there. 24 lakh 62,021 lakhs. Now you tell me, as a user of the financial statement, the user are not only chartered accountant. User could be anyone. Shareholder could be anyone. So you tell me whether this is readable or this is readable. What is readable? If someone write 521 crore, 521,1,2,3,4,5,6,7, whether this is readable or someone will write 521 and above they will say that rupees in crores, right? So this is easily readable or this is readable? course, rounded off numbers are more readable, right? These numbers are small. You will be able to understand, okay, 100 crores. Okay, 2000 crores. Okay, 1 lakh crore. The Reliance turnover is in lakhs of crores, in lakhs of crores. If you will write the number of Reliance, you know how much digit will be there. 15 digit, 16 digit, 17 digit, 17 digit for 1 year. Then comparative, if you will club the comparative, it will be 34 digit. It is not readable. It is not presentable. Nothing. That is why this rounding of provisions will come into picture. Even as a chartered accountant, if someone will tell you how many zero will be there in crores, you will not be able to tell quickly. Right? Have you understand? That is why more from the user perspective, this rounding of provisions has come into picture. I hope it is clear to all of you. So friends, division 2 to schedule 3 says that you have to, the threshold has been given for rounding off. It says that if your number is less than 100 crores, your number means total income. In that case, you can round off all the numbers in your financial statement to the nearest 100, 1000, lakhs or millions or decimal thereof. Millions means 10 lakh. Okay. So for example, if you have to put this number into lakhs, how will you put that? So 1, 2, 3, 4, 5. It is how much? 52,150 lakhs, right? 52,150 lakhs. Is that clear? Is that clear? So 52,150 lakhs. And you can put in decimal also, 52,150.20 lakhs. Is that clear? Or if let's say the total income is more than 100 crores, you can round off this in crores also, right? You can round off in 521.50 crores, right? Is that clear? What is the rounding of provision? The rounding of provision, yes, Mansa, you can present the financial statement in international number system. Please refer the financial statement of Bharti Airtel. They are referring in the international number system. They are presenting the financial in millions, and million is allowed here as well. Millions, okay. Many companies are giving their numbers in millions. Reliance is giving in crores, but many companies are giving in millions. Okay. Is that clear? So this is the rounding of threshold which is given. If total income is less than 100 crore, then all the number of the financial statement are rounded off in the nearest 100,000 lakhs or millions or decimals thereof. If it is more than 100 crore rupees, to the nearest lakhs, millions or crores or decimal thereof. Is that clear? This is the rounding of provision, right? Yes. So we have discussed that it is depending on the threshold is given on the basis of total income, right? Up to 100 crores or 100 crore or more. From where the meaning of the terms given in schedule 3 needs to be referred, like related party, control, associate, property, plant and equipment, etc. When you read schedule 3, it provides the format of balance sheet, P&L. So there are a lot of nomenclature, a lot of words are there, like property, plant and equipment. But this property, plant and equipment is not defined in schedule 3. In schedule 3, the word related party has been used, but related party has not been defined in schedule 3. The word control, associate, joint venture, consolidation, these words have been used, but it is not defined in schedule 3. So from where you have to get the meaning of these words which is given in schedule 3? From where? Very simple. Yes, relevant Ind AS. Rishabh is asking, sir, are we supposed to round off the number in exams? Rishabh, of course, yes. And let me tell you, if the numbers are so big, in exams, in the question, it was itself rounded off. If you see the past question papers, if you see the RTP, right, if you see the study material questions, they were already writing that the numbers have been rounded off in thousands, lakhs, millions, crores. Okay, you will get the number in the rounding of itself. Okay, Naman, meaning of the cannot be referred from Companies Act 23, 2013. Schedule 3 says that this meaning of the terms can be referred from Ind AS, right? Although Ind AS are notified under section 133 of Companies Act 2013. So these meanings have been referred from Indian accounting standards, right? Is that clear? Rishabh, Naman, whether any threshold for materiality is defined in Schedule 3? Whether any threshold for materiality is defined in Schedule 3? Yeah. Any materiality threshold is defined in Schedule 3? Since yes, it is defined in Schedule 3. It says that any item of income or expenditure which exceeds 1% of the revenue from operations or rupees 10 lakh, whichever is higher. For example, the company is having a turnover of rupees 200 crores, revenue of 200 crores. What is 1% of 200 crore? 2 crore. 2 crore is 1%. Okay. And in this 2 crore or 10 lakh, which is higher? Of course, 2 crore is higher. So the company has spent 2 crore 40 lakh rupees on the printing and stationery during the year, right? And the company has shown this expenditure, this expenses into the other expenses, clubbed under other expenses. Generally, every year the expense was not so bigger, but this time the company has, restructured or revamped its entire stationery, right? The company has printed diary for every employee, every vendor. The company has printed calendars. The company has printed pens. So the company has printed its, other stationery material. So a lot of expenditure were there, and it is 2 crore 40 lakh, which is more than 1% of the revenue from operation. So division 2 to schedule 3 says that in this case, the company is required to disclose this item separately, right? So this item has to be disclosed separately in the notes to accounts. Okay. So this requirement does not pertain to Ind AS. This requirement pertains to schedule 3, right? So this requirement pertains to schedule 3. Is that clear? Is there any aging related disclosure given in the schedule 3? Yes. On 24th March 2021, there were a lot of amendments. Major amendment happened in all the division of schedule 3. We are concentrating only on division 2 to schedule 3, but in every division this amendment was there. What was the amendment? Lot of regulatory information was required in schedule 3. So whether any aging related disclosure is given in the schedule 3, answer is yes, right? Aging related disclosure with respect to debtors, which is known as trade receivable, creditors, which is known as trade payables, and capital work in progress. In these 3 areas, aging related disclosure is given in these 3 areas, right? In these 3 areas, Vivek is asking, sir, for practical purpose, are number allowed to be presented in billions? To be honest, Vivek, I have never seen the financial statement, Indian financial statement, where the number have been presented in billions. I have never seen that. Okay. And if you see, going by the division 2 to schedule 3, billions is not allowed to be shown in the rounded off in the financial statement. So you cannot present your number in billions. The maximum is crores. Okay. Namrata is asking, it can be referred from GAAP also for non-corporate entities. Namrata, I have not understood your question. Naman is asking 1% of total income or rupees 5 lakh. Naman, it is not 5 lakh, it is 10 lakh for division 2 to schedule 3, right? It is 10 lakh for division 2 to schedule 3. And it is not 1% of total income, it is 1% of revenue from operation. If I correctly recall, it is 1% of revenue from operation, right? Is that clear? Let me show you this thing in the institute study material as well. I believe the study material, you are able to see this study material. You can see, please read this. Any item of income and expenditure which exceeds 1% of the revenue from operation or rupees 10 lakh, whichever is higher, right? In addition to the consideration of materiality as given in the general instructions. Is that clear? I hope it is clear, guys. Santosh is asking, sir, in aging, whether each and every debtors or creditors to be mentioned? No. The name of the debtor and creditor will never be mentioned in the financial statement, okay? Because of confidentiality clause as well. Until and unless it is specifically required in the division 2 to schedule 3, or let's say in the Indian accounting standard, right? Is that clear? Aging related disclosure is with respect to debtors, creditors, and capital work in progress, right? So let me show you these disclosures, aging related disclosures. This is aging for trade payable. So division schedule 3, and this amendment was made on 24 March 2021. So prior to financial year 21-22, this requirement was not there. And what was the requirement? Aging for disputed and undisputed trade payable to be given separately in following manner, right? If due date of payment is not available, disclosure is given from the date of transaction. Okay. So aging for disputed, first of all, for every creditor, you have to provide the disclosure between disputed creditor and undisputed creditor. And between disputed and undisputed creditor, you have to provide the disclosure of what is outstanding for MSME creditor and other than MSME creditor, right? So friends, you can see that now the government is asking for all the trade payable, the government is asking what is outstanding for MSME and non-MSMEs. It was asking earlier also, but now government is asking aging wise disclosure of MSME, non-MSME, and disputed and non-disputed, right? Is that clear? And what is the aging? It is less than 1 year, 1 to 2 year, 2 to 3 year, more than 3 year, right? Which is outstanding from the due date of payment. For example, if I am getting any services from a vendor, and when the vendor raised the invoice, so I have agreed with the vendor that I'll pay him from the 30 days, after 30 days from the date of invoice. So what is my due date of payment? 30 days, after 30 days from the date of invoice. But if nothing has been agreed with the vendor, in that case, the outstanding for the purpose of aging, the aging has to be made from the date of invoice, which is the date of transaction, right? Is that clear? And I can show you the real life disclosure from Tata Motors Limited. You can see how this Tata Motors Limited have disclosed. MSME vendor other than MSME, right? Disputed MSME, disputed others. So it is undisputed, it is disputed. And this is aging, not due. Not due means as per the agreed period, it is not yet due. Okay. Then less than 1 year, 1 to 2 year, 2 to 3 year, more than 3. And this is matching with your balance sheet and accrued expenses as well, right? And accrued expenses is like what I can say. The accrued expenses is like the expenses which have been accrued, but the invoice has not been raised, right? That is why no aging of accrued expenses has been given. And just to match this number with the balance sheet, it has been added in the creditor numbers, right? Is that clear? Is that clear? Lipika, I am using the latest study material. Yes. Now coming to the trade receivable. Okay. In the same manner, the trade receivables are also required to be disclosed bifurcated between disputed and undisputed. And the trade receivable is, of course, bifurcated between considered good, considered doubtful. Okay. So you have to bifurcate between these things also. Okay. And what is the aging? Less than 6 months. In the creditor, it was less than 1 year. In debtor, it was less than 6 months, 6 months to 1 year, 1 to 2 year, 2 to 3 year, and more than 3 years, right? So I can show you this disclosure from Tata Steel Limited. And friends, I'm showing you the real life disclosure. It is not like a imaginary disclosure. I have extracted these disclosure from the annual report of the listed companies, right? You all have heard about Tata Steel. So you can see that undisputed considered good, undisputed credit impaired. Credit impaired means the debtor has become bankrupt. Okay. Undisputed considered good, disputed credit impaired. Okay. So then provision for doubtful debt. Not due, less than 6 months, 6 months to 1 year, 1 to 2 year, 2 to 3 year, more than 3 year. This is not required as per Schedule 3, but why they have given? They have given because to match the number with the balance sheet. Because this is the basic requirement. This is a general understanding that whatever you are showing in the notes to accounts, it has to be matched with the balance sheet, P&L, whatever it is. Okay. Is that clear? Is that clear, friends? Yes, Lipika, I'll provide my PowerPoint presentation. I'll provide my Excel file. And when I'll provide my PowerPoint presentation PDF files, of course, you will get all these notings, right? Which I am doing, which I'm noting. You will get all these notings as well. Okay. Is that clear? Accrued expenses, guys. For example, you have accrued expenses for electricity, water, rent, right? So that is not yet due. It is not yet due. So that is why they have like interest accrued. They have shown this accrued expenses in the trade payable, right? So accrued expenses has to be clubbed under trade payable, right? But accrued expenses aging has not been given. Why? Because of course the invoice has not yet come. So that is why they have just added these accrued expenses in the total so that the balance sheet total will match with the notes to accounts total, right? Then let's come to the capital work in progress or intangible asset under development. Standard says that for capital work in progress, you have to provide the breakup between the projects which are running and the projects which have been temporarily suspended. And for those projects, you have to provide the aging for less than 1 year, 1 to 2 year, 2 to 3 year, more than 3 years. So for CWIP and trade payable, the aging is less than 1 year, 1 to 2 year, 2 to 3 year, and more than 3 years, right? And then total. And this total shall tally with the CWIP amount in the balance sheet. It is specifically written in the division 2 to schedule 3, right? And additional disclosure. So what happened earlier? Earlier, a lot of real estate project, a lot of government projects, the government which are giving to the private parties. So these were getting delayed. And due to that, the user money or the public money got risky. Okay. The public money. So there could be a chances of default of public money. So that is why government has asked these kind of disclosure that you need to provide the breakup of capital work in progress for project which are running and project which are temporarily suspended. When you go to the real estate sites, you will find few sites where the structure is already there, but no work is happening on that, right? And the company has launched the new site. Why? Just to get the money from the new buyers. Have you understood that? Because the old buyers have already struck. If you have given 70%, 80% money to the real estate company, where you will go? You will not go anywhere. So now company needs more money. So the company will hold that project and the company will launch the new project so that the company will get 30, 40, 50% from the new buyer. So now the government is asking for these kind of disclosure as well. These were not required prior to 24 March 2021. Now these things are required. Okay. So in case completion is overdue or has exceeded its cost compared to its original plan, following completion schedule shall be given. Right. So now the company is also required to provide a disclosure. What disclosure? Any project where the company has budgeted that this project will take 100 crore rupees. But if it has exceeded the budget, that disclosure has to be given. Or the company has estimated, right, that this project will be completed in 2 years. So either in terms of time or in terms of money, if it is overrun, if it has been exceeded, so the disclosure is also required. And now I have Hindustan Unilever Limited. Hindustan Unilever Limited real life disclosure from their annual report. They have given the disclosure project in progress, project temporarily suspended. less than 1 year, 1 to 2 year, 2 to 3 year, more than 3, and this is the total amount, right? Then they have given project where the timeline have been exceeded, 473 crores. Project where the budget have been exceeded, it is 2 crore, right? And then for those projects, the company has given the aging as well. Kolkata factory, Assam factory, Kandla factory, Rajamundra factory, Khamagaon factory, others, Gandhidham factory. So the company has given these kind of disclosures. Is that clear? Is that clear, guys? I hope you are able to understand more while looking at the real life disclosures. So Sayyad, you will get all the notes and these PPTs by tomorrow, right? Because I am using, so this yesterday class, today's class and tomorrow class are interrelated. So I will share all the notes once the class will complete. So tomorrow I will share all the Excel files, all these notings, all this PowerPoint presentation, right? Sriram is asking, sir, in trade receivable aging, a term called allowance for credit losses is mentioned. This is nothing, provision for doubtful debt. Okay. I have told you in Ind AS, you will find some new words, but the meaning is the same. So it is provision for doubtful debt. Credit impaired means, sir, credit impaired means, I have told you that the debtor has already become bankrupt or insolvent, or the debtor is not able to pay anything, right? The credit worthiness of the debtor has been impaired. Impaired means finished, khalas, diminished, destroyed. Okay. Is that clear? Ravinder, Lipika, Namrata, Sayyad, Sriram. Is that clear to all of you? I hope I have answered your query, right? And I have shown you the debtors, creditors, and TWIP aging. What were the major amendment in Schedule 3 in accordance with the last amendment, right? So friends, I have told you there was major amendments on 24th March 2021, where a lot of additional disclosures are required to be made in the financial statement. I'll speak about one or two more amendments. So friends, earlier the requirement was the company has to provide the shareholders, detail of shareholders which are having more than 5% of the share capital of the company. But from the last year, after 24 March 2021, the requirement has been extended, and it says that if the company, so basically if the shareholder is a promoter, so where the promoter shareholding is there, and if the promoter is holding whatever percentage of share, it is required to be disclosed. So what is required to be disclosed? Earlier the requirement was disclosing the name of the shareholder who are holding more than 5% of the equity share capital. Now, in addition to that, the requirement was if the share are held by the promoter at the end of the year, right? Shares are held by the promoter at the end of the year. You have to give the name of the promoter, number of share, and percentage of total shares in the current year. And of course, you have to give comparative as well, and the percentage change during the year. Why it is important? It is important because normally, if you will discuss with a financial expert, right, and you will ask which share I should buy, right? So the expert will tell you that one thing you need to check. If the promoter are reducing their shareholding, it means promoter wants to exit from the company, or promoters are diluting their interest. It means promoter does not have a trust on this company. Are you getting me? But if the promoter were having a high stake, for example, let's say, I'm just giving you an example, Reliance Industries Limited. If Mr. Mukesh Ambani is having, let's say, 40%, 50% market share, or 40% or 50% of stake in the company, he will be more concerned about the growth of the company, right? Because if the share price will drop, his net worth will drop automatically, right? His net worth will drop automatically. Like when the share price was dropped due to this Hindenburg report of Adani Group. You have seen that the Mr. Gautam Adani has dropped from second number of richest position in the world, second or third number richest person in the world, to 40th or 50th number position, right? Why? Because he has a major stake in the company. So friends, that is why this kind of disclosure was required by the government in terms of Ministry of Corporate Affairs. And let me show you the disclosure of Hindustan Unilever Limited, what they have given. You can see that they have shown the name of the promoter. Then whatever number of shares promoters are holding, you can see that 0.8%, 1.4%, 2.2%, even though it is less than 5%, but still they have given. If this requirement would not have come on 24 March 2021, these were not required. Only more than 5% were required, right? Then for last year, then there were no change in the percentage. It means the promoter have a confidence in this company. They are still holding 62% of the entire shareholding of the company, and they are not diluting their interest. Yes, are you getting me? Yeah. Ravinder is saying like Mr. Premji is holding 60% shares in Wipro, right? Is that clear? Is that clear, guys? Let me show you one more important disclosure. Then I'll give you a break, and then we will start Ind AS 1. Relationship with struck of companies. Relationship with struck of companies, right? So friends, what is meant by struck of companies, right? In the older days, I still remember. So when I was reading in my school, and it was a time of, I would say 1990 or 1995, right? If a student will pay, if a student will not pay the school fees for a continuous period of 3 months, his name was struck off from the school, right? His admission was cancelled, his name was struck off from the school. And when the parents will come and the parents will pay the school fees along with interest and penalty, then only the principal will allow readmission to that child, right? The same lies with the struck off company as well. Friends, what is meant by struck off company? If a company is not filing its return, annual return, for a period of 3 years, or the company is not making a compliances which is required by the Companies Act for a continuous period of 3 years, in the Companies Act register, the name of that company was deleted or struck off from the register, from the register in the register in the Companies Act, right? From the Companies Act register, MCA register. Friends, it does not mean that the company is not active. The name has been struck off, right? For example, if a chartered accountant will not pay its membership fee in time, his name is struck off from the register of the members, right? And he is not authorized to sign in that period. Okay. So that is why every practicing chartered accountant is paying the fees in time. But I'll tell you, the chartered accountant who are into service, 30 to 40% chartered accountant in service are not paying their fees because they're not doing any attestation function, right? So the name have been struck off from the register of members. They are not allowed to any, CP hours, CP credits. They are not allowed to, to vote in the institute elections. So the name have been struck off. Likewise for the companies as well. So now, have you seen a web series of Harshad Mehta? Whether anyone have seen the web series of Harshad Mehta? That share scam, have you seen that? Harshad Mehta has started a company, right? And he was doing a bogus transaction or transaction in that company. Government has seen that a lot of companies were doing the transaction with these defunct companies or struck companies. Okay, defunct companies or struck off companies. Yes, Mayank, scam 1992. That is why in wide notification dated 24 March 2021, Government of India through Ministry of Corporate Affairs has asked companies to provide the details, right? Provide the details of what? Name of the stock of companies, right? If a company has done any transaction with a stock of companies, then following disclosure is required. What is the disclosure? Name of the stock of company. Then nature of transaction with this company. For example, a company is paying rent. A company has provided any service. A company has availed any service, or that stock of company is a shareholder of the company. Even that disclosure is required. Balance outstanding. What is the outstanding balance as on the date of the as on the year end reporting date? Relationship with the stock of company, if any, to be disclosed. Relationship, for example, that stock of company is a vendor, that stock of company is a customer, their stock of company is a shareholder. So this kind of disclosure is required. Name of the company, nature of the transaction, relationship, and outstanding balance, right? Since let me show you the real life disclosure from the Tata Steel Limited. They have given the name of the company, nature of transaction, sale of goods, purchase of goods, receiving of services, equity, subscription of equity shares, then outstanding balance in the current year, outstanding balance in the previous year, then this relationship with the stock of company, customer, vendor, advance, equity shareholder, right? So this is there, right? Is that clear? And then for the equity shareholder, they have given this entire list of equity shareholder. Okay. This is the entire list of equity shareholder. How many shares they are holding? What is the paid up capital on 31st March? What is the paid up capital on 31st March 2021 in the comparative period? Right. These disclosures they have given. Right? Is that clear? Is that clear, friends? I can see the lot of participation from the students, and I am glad to share that in last 1 hour and 30 minutes, it's 8:33 now, and the responses have been increased to 500, right? So far 500 responses has been there on the board of studies link, right? So it can, so it shows that the lot of active participation is there and students are listening very carefully, they're responding, right? Great, guys. So friends, coming to this PPT again, I have told you this entire universe of uh, division 2 to schedule 3 in detail. We talked about element of financial statement. We talked about division 1, 2, 3. We talked about element of financial statement, component of financial statement. I have shown you one annual report. Then I have shown you the balance sheet, P&L, statement of changes in equity format also from the institute study material. And with this 17 questions, I have covered all the important aspect, not only from the examination or theoretical perspective, but from the interview or the real life perspective as well, right? I have covered everything from schedule 3 context, right? And from the major amendment perspective, I have covered rounding of provision, I have covered aging for debtors, creditors, capital work in progress. I have also covered the disclosure of stock of companies, right? So I have covered everything with respect to these 18 questions, right? And of course I have covered with the requirement of disclosure of promoter shareholding, irrespective of the fact whether it is 0.01%, right? Right, friends? So just give me a minute. Yes. So friends, I have concluded with division 2 to schedule 3. And let's have it's 8:35 now. Let's have a 10 minutes break and we will start our session on 8:45, right? With Ind AS 1 presentation of financial statement. Thank you so much. And if you have any query, please write down your query on the board of studies query link. Uh, let's say one query is there. Namrata is asking, thank you, Ravinder. Thanks for your feedback. Namrata is asking, even one share is held by stock of company, then also disclosure need to give yes. Irrespective of the number of shares, you have to give the disclosure if there is a outstanding transactions with the outstanding balances with the stock of company. Thank you, Prashant. Thanks for your feedback. Vivek Srivastav is sharing, sir, is the purpose of this disclosure is to avoid bogus transaction? Of course, yes. Nidhi is asking, yes, sir, clear. Because of practical example, it is really easy to understand everything. Thank you, Nidhi. Thank you, Nidhi. Lipika is saying, we'll be learning all these in details as well. So, yes, Lipika. So, whatever I have covered in detail, right? And whatever was required from the CA final perspective, I have covered that. Okay. Rest you will read and you will understand. And you can see that I have also shared Hindustan Aeronautics Limited disclosure. I have also shown you Hindustan Unilever Limited, Tata Steel Limited, TVS Motors Limited. So I'm also showing the practical aspect of it. Okay. Like for rounding off, I have shown you the actual number of Hindustan Aeronautic Limited. For promoter shareholding, I have shown you the Hindustan Unilever Limited. For this CWIP, I have shown you Hindustan Unilever Limited. For this aging of debtors, I have shown you Tata Steel, right? Struck of company, I have shown you Tata Steel, right? So thank you so much, friends. Let's have a 10 minutes break and we will start at 8:45. Thank you so much. Now we are starting Ind AS 1 presentation of financial statement, right? Although we have already started presentation of financial statement, but it was more from the perspective of Division 2 to Schedule 3, which prescribe the format of financial statement. Let me see the query box if there is any query in there. So Rahul Garg is asking, sir, please explain promoter disclosure provision again. Okay. Rahul, earlier, prior to provision of division, prior to amendment on 24 March 2021, the disclosure required was the company has to provide the disclosure of, shareholder who are having more than 5% of the share capital of the company, right? And what was the disclosure required? Name of the shareholder, number of share, percentage holding for the current year, for the comparative year. And if there is any percentage change, you need to provide that, right? Now, what is the difference between a shareholder and a promoter? So, for example, I am Alok Garg and I have nothing to do with Reliance Industries Limited, right? But I could be a shareholder of Reliance Industries Limited, right? But everyone cannot be a promoter of Reliance Industries Limited. For being a promoter, right, he has to closely related with that company, either as an investor, right? And I'm not talking about a passive investor. I'm talking about a strategic investor, right? For example, Google. If Google is inserting money in Reliance, Google becomes a promoter of a Reliance, right? So friends, earlier the requirement was more from the shareholder perspective, right? And if I am a FII, or let's say if I am a big investor, I'm Rakesh Jhunjhunwala. So if I have to make money and the share price is good, it is already increased at all-time high, I'll sell that shares and I'll exit from the market, right? I'll book the money, I'll book the profit. But the objective of the promoter is not only to have the money from sale of stake. Generally, they will sell the stake only when they need the money, when they will be in the urgent need of money. So that is why when this amendment has come on 24th March 2021, Ministry of Corporate Affairs or Government of India wants to track the movement in the promoter shareholding as well, right? And that is why, in addition to the requirement of shareholder, because there are many shareholders who are not the promoter, so this requirement was still there. But in addition to the shareholder requirement, this amendment requires that a company has to provide the promoter shareholding detail as well. Promoter shareholding detail means name of the promoter shareholder, percentage of shares which the promoter shareholder is holding, number of shares in the current year, in the last year, and if there is any percentage change, that is also required to be provided. So this is the only disclosure which the government is asking from the companies, right? Sir, what is the benefit of this disclosure? The benefit of this disclosure is, as a user of the financial statement or as a regulator, they will be able to quickly see that, okay, the promoter shareholding is either increasing or decreasing, right? So they can frame an opinion about the management of the company, right? If regularly the promoter shareholding is going down, it means the promoter does not have a trust on the company, or promoters wants to exit from the company, or promoters wants to dilute the control from the company, right? So basically, I'm not saying this will always be the case. If a promoter is having 80% holding and now he has come down to 75%, it does not mean that in 5 years he has diluted 5%. It is not a good company. I'm not saying that, but these are the indications, and you will be able to look at these indicators. You will be able to frame view, opinion by looking and collating these kind of informations, right? Is that clear, Rahul? Rakit is saying that promoter, no, not necessarily. Promoter is not necessarily the founder of the company, right? Reliance is incorporated in 1973. For example, if I have invested, let's say, 50,000 crore in Reliance, and Mr. Ambani will give me, let's say, 8% or 5% holding, and I am entitled to take a board decision as well, right? I can participate in the board decision as well. So I can be a promoter of that, of Reliance Industries. Promoter is not one person. Promoter is a group of person or entity as well. Karthik is asking whether 5% shareholder is deleted. So Karthik, I have already told in addition to that disclosure, right? I have repeated this 3-4 times. In addition to the disclosure of more than 5%, that shareholder disclosure, this promoter disclosure is a separate disclosure, right? Is that clear to everyone, guys? Is that clear? Rakesha, Karthik, Rahul, is that clear? Or it is still not clear? Okay, let's move on. And friends, now we are going to start Ind AS 1, presentation of financial statement, right? This standard Ind AS 1 is a very detailed standard, this coverage is very wide in comparison to accounting standard 1. It's a very detailed standard, right? If I talk about the agenda of the standard, so of course, in every standard, since this is the first standard, and let me give you a view of this standard. Yesterday, I've told you that how this Ind AS are structured. First, the main standard is there. Then there are some alphabetical appendix, appendix A, appendix B, appendix C. In these alphabetical appendix, these are nothing. These are the interpretations, clarifications of the standard. Then there is a numerical appendix, appendix 1, Roman 1. Okay. And in the numerical appendix, the difference between Ind AS and IFRS is given. Para-wise difference is given, right? Para-wise. Is that clear? Now, when you read any standard, the standard starts with objective and scope. What is meant by objective? The purpose. Why this standard was introduced, right? And if I talk about scope, scope talks about coverage, right? So objective means purpose of the standard, right? For example, the deferred tax standard, income tax standard. What was the objective of income tax standard? To prescribe the measurement and recognition of the deferred taxes and income taxes, right? Scope means coverage, right? Purpose of the financial statement. This standard prescribes what is the purpose of the financial statement. Tell me what could be the purpose of the financial statement. The purpose of the financial statement is to provide the financial position, the information about the financial position, financial performance, cash performance of the company, right? Balance sheet gives you the financial position, right? What is the financial position of the company? How you will calculate the solvency ratio? How will you calculate the current ratio? How will you calculate the quick ratio? You will calculate all these ratios by comparing the balance sheet number, that whether the company is long-term solvent or not, whether the company is short-term solvent or not, right? What is the market capitalization of the company? What is the net worth of the company? What are the shareholder funds, right? What are the current assets? What are the non-current assets? So how will you find the financial position of the company? You will find the financial position of the company by looking at the balance sheet. Financial performance. So how will you find the financial performance of the company? So you will find the financial performance of the company by looking at the profit and loss, by looking at the profit and loss, right? That is why if you see the balance sheet, in the balance sheet, the heading is balance sheet as at 31st March 2022. Balance sheet as at, okay, 31st March 2022. Balance sheet as at 31st March 2021, right? As at, okay. So friends, balance sheet as at, okay, because it is showing the financial position as on date. But whenever we are talking about the performance is for the period. That is why the statement of profit and loss is for the year ended 31st March 2022. Have you ever think of whether the correct word is statement of profit and loss for the year ending or for the year ended? What is the correct word? For the year ending or for the year ended? What is the correct word? Is that for the year ending or for the year ended? Friends, what is the correct word? No idea? No idea, then get an idea. What's the correct word? It's very important to understand. It's not a simple grammar. It's not a simple English. Now I'll give you a clue. You tell me, for example, your boss, your principal has given you to prepare a balance sheet. When he will give you to prepare a balance sheet, I mean to say financial statement. So let's say for 31st March 2023, when the financial statement needs to be prepared, on 31st March 2023 or after 31st March 2023? Of course, after 31st March 2023. The audit will happen, of course, after 31st March 2023. It means by the time you are signing that financial statement, by the time you are preparing that financial statement, the time has already gone. So what should be the correct word? Is it for the year ending or for the year ended? What should be the correct word? Radhika, it is not ending, it is year ended. Akansha, it is year ended. Everyone has given a right answer. It is year ended. Let me show you the ONGC Limited financial statement. You can see that it is year ended. It is not year ending, it is year ended, right? Is that clear? So what is the purpose of financial statement? Statement of financial position, financial performance, and financial performance can be seen from the profit and loss statement, from the statement of changes in equity as well. So statement of changes in equity will show you the movement in the capital, movement in the reserves, right? So it shows you the shareholder funds movement, the net worth movement, and that is why it is also show you the financial performance. The cash performance, the liquidity position, the liquidity performance is given by the statement of cash flows, and that is why statement of P&L, statement of changes in equity, statement of cash flow, these all are period ended or year ended, right? So even the standard also prescribe the purpose of financial statement. Component of financial statement. We have discussed this thing in component of financial statement. It is given in, just give me a minute. This component of financial statement is also given in your where? It is given in your schedule 3 as well. Okay. So we have discussed that it is given in schedule 3 and Ind AS 1. In schedule 3, it is given in the balance sheet format, the P&L format, and the statement of changes in equity format is given, right? The cash flow format is not given in schedule 3. The notes to accounts are partially given in schedule 3, right? You remember that one page which I have written, that what is given, what is not given, right? Definition. In this standard, some definitions are also given. Then overall consideration. In this standard, the standard also talks about the overall considerations while preparing or while auditing the financial statement of a company. When I'm talking about financial statement, I no need to explain that I am talking about Ind AS financial statement, right? Whatever we are talking all about Indian accounting standards. So what could be the overall consideration? Tell me whether the financial statements are prepared on a cash basis or on an accrual basis. Whether financial statements are prepared on a cash basis or on accrual basis. Yeah, it is on an accrual basis. Whether the financial statement is on is prepared on a going concern or not on a going concern, it is prepared on a going concern generally, right? So friends, right, the financial statement should be prepared on an accrual basis, right? The material item has to be disclosed separately. The concept of offsetting is there, right? The financial statement should reflect a true and fair view, right? So these are the overall considerations which needs to be applied in preparation and presentation of financial statement, right? Then structure and content. As far as structure and content is concerned, if I talk about the structure and content, right, this standard talks about what could be the structure of the financial statement, like what should be the component, what should be the content of the financial statement. So Ind AS 1 talks about what are the minimum line item in the balance sheet. What is the minimum line item in the profit and loss? What are the minimum line item in the statement of changes in equity? What should be your order of presentation in the notes to accounts? So what should be your order of presentation, right? So Ind AS 1 talks about these things. As far as Schedule 3 is concerned, Schedule 3 provides you a format of balance sheet, profit and loss, and statement of changes in equity, right? So this standard talks about what should be the minimum content in these statements, what should be the order, what should be the presentation. So Schedule 3 talks about the guidance about the structure and content of the financial statement. Ind AS 1. Ind AS 1 provides the guidance about structure and content of the financial statement. I hope the agenda is clear to all of you. Any problem in agenda? Very simple agenda. Yes. Any doubt, any problem in the agenda, guys? Agenda is pretty simple and pretty clear. Yes. Okay, very good. Now coming to the objective of Ind AS 1, it's the theoretical part. What is the objective? This Ind AS 1 prescribe the basis. Prescribe the basis for what? It prescribes the basis for presentation of general purpose financial statement. What is meant by general purpose financial statement? First of all, so friends, you need to understand that Ind AS 1 is only applicable for presentation of general purpose financial statement. And as the name suggests, general purpose means the financial statement which serves the purpose of the entire stakeholders at a large, right? So these financial statements are not specific purpose, it's a general purpose. So general purpose financial statement are prepared using the relevant GAAP in the country. For example, when you see any balance sheet of a listed company, the first component you will always find is balance sheet. It's not like that the first page Reliance is giving as a balance sheet and Bharti Airtel is giving as a P&L and Adani is giving as a statement of changes in equity and Nestle is giving it as a cash flow. No. Be it a very smallest balance sheet or be it a very big balance sheet, be it a listed balance sheet, be it an unlisted balance sheet, the first page of every financial statement is balance sheet. Are you all agree with me? Are you all agree with me? Yeah. The first line in every Ind AS balance sheet is property, plant and equipment. Are you all agree with me? The first line on the liability side in every balance sheet is equity share capital. Are you all agree with me? The first line in all profit and loss is revenue from operations. All agree with me? In statement of changes in equity, the first section will always be equity share capital. Again, all agree with me? So friends, what is meant by general purpose financial statement? General purpose financial statement are those financial statements which have been prepared as per the relevant GAAP of the country. GAAP means generally accepted accounting principle. So for Ind AS financial statement, what is a GAAP? The GAAP is Schedule 3, Indian Accounting Standard, and relevant laws and regulations of the country, right? For example, MSME disclosures. So how will you find MSME disclosure? So you will refer the MSME Act and put the MSME disclosure, although it is also given in Schedule 3. It is not given in Ind AS, right? How will you compute provision for income tax? You will compute provision for income tax, provision for current tax using the Income Tax Act, the regulation as per Income Tax Act, right? So this is known as a general purpose financial statement, right? For example, Mr. Ambani will say that. So Mr. Ambani called his CFO and Mr. Ambani told Mr. CFO that, Mr. CFO, I want a balance sheet where the first line you have to show as a debtor. Because I am more worried about, I'm not worried about property, plant and equipment because I know I have already invested, right? That money belongs to me. I know that. I'm more worried about what is the outstanding amount which I need to receive from my debtors. So the first line item should be the debtors. Okay. And you need to bifurcate the debtor between the domestic debtor and foreign debtors. Then after debtor, you have to show the creditors. Domestic creditor, foreign creditor, right? So second line item after debtor, it should be creditor. Then you have to give the investment balances, treasury balances, and you have to give the loan balances. Mr. Ambani is asking a balance sheet from his CFO in such a manner. Now you tell me whether Mr. CFO will provide such balance sheet to Mr. Ambani or not. CFO has no any choice, he will provide. But Namrata is a shareholder of Reliance Industries Limited. Ravinder is also shareholder of Reliance Industries Limited. Prashant, Nidhi, Lipika, Rahul, they are also shareholder of Reliance Industries Limited. If they will ask such balance sheet from the CFO of Reliance Industries Limited, whether they will provide this kind of balance sheet to all these shareholders? Answer is no. Why? Because it is not a general purpose financial statement, right? Whatever Mr. Ambani is asking, it is not a general purpose. It is a specific purpose financial statement. It is a tailor-made financial statement. It is a customized financial statement. It is a MIS based financial statement, right? Is that clear? So this standard is only applicable for general purpose financial statement. Is that clear? Okay. To ensure comparability, this standard ensure comparability with entity's own financial statement of prior period, because we are providing a comparative of 1 year. So this standard says that you have to apply the consistent accounting policies. You have to make your presentation consistent, right? So this standard ensure that the entity financial statement should be comparable with the previous financial statement, right? Or Bharti Airtel financial statement should be comparable with the Vodafone Idea financial statement. Means the financial statement comparability should not only be ensured from the perspective of within the entity of two different periods, rather between the entities as well. Is that clear? This standard set overall requirement for presentation of financial statement, right? Guideline for their structure and minimum requirement for their content. This standard also talks about what should be the minimum line item in the financial statement. I mean to say balance sheet, P&L, how these balance sheet, P&L, statement of changes in equity will look like, what is current, what is non-current, right? What should be the minimum line item, whether it should be in the nature of aging or it should be in the nature of liquidity. So this standard talks about these aspects, right? Coming to the scope of the standard, if I talk about this particular standard, standard is not only relevant from the examination point of view, this standard is relevant from the real life perspective as well. When actually you will prepare the balance sheet, you will prepare the financial statement, when actually you will audit the financial statement, this standard is ultra important to all of you, right? And yesterday someone was asking, sir, what material we need to refer? I would say that these lectures, faculties, class notes, and study material and RTP, revision test paper, is more than sufficient to get a good score in your examination, right? The students who have just listened these lectures and the students who have referred RTP and study material and ICI material, they have scored more than 90% marks in the financial reporting paper as well, right? Is that clear to all of you? Okay. Now coming to the scope of the standard. This standard is applicable in preparation and presentation of general purpose financial statement in accordance with Ind AS. The other Ind AS, so this standard is only applicable for presentation of the financial statement, which general purpose. Other Ind AS set out the recognition, measurement, and disclosure requirement for specific transaction and other events. So there are total 39 Ind AS. So what other Ind AS talks about other than Ind AS 1? For example, property, plant and equipment standard. It talks about the measurement, recognition of fixed assets. Intangible asset talks about intangible assets, measurement, recognition, amortization, disclosure. Related party disclosure standard talks about the disclosure of related party, transactions, relationship, etc., right? So guys, if I talk about this particular Indian accounting standards, so other Ind AS talks about the specific things, which is recognition, measurement, and disclosure requirement for specific transaction and other events. Income taxes, Ind AS, it talks about the income taxes recognition, disclosures, other than etc. etc. Right? It is not applied to structure and content of condensed interim financial statement under Ind AS 34 except for general features of financial statement. So you are aware that listed companies are also filing their results under the SEBI regulations, right? Under regulation 33 of SEBI LODR. Now what happens when these listed companies are filing the results under SEBI LODR? They are filing on a quarterly basis, right? And there is a Indian Accounting Standard 34 which talks about interim financial reporting. What is meant by interim financial reporting? Means reporting for less than 1 year. Reporting for less than 1 year, right? So friends, it is also known as condensed interim financial statement. For a half yearly basis or for a quarterly basis, the standard allows you to prepare interim condensed financial statement, right? So as far as structure and content is concerned, for interim condensed financial statement, Ind AS 1 is not applicable. But as far as general feature is concerned, Ind AS 1 is applicable. Sir, what is difference between structure and content and general feature? Structure and content means what should be the minimum line item in balance sheet, P&L, statement of changes in equity, etc., etc. What is meant by general feature? General feature means financial statement has to be prepared on an accrual basis, right? Financial statement has to be prepared on a accrual basis, going concern basis, material item has to be disclosed, comparative information needs to be given, right? Consistency of accounting policy should be there. These are the general features of the financial statement. Is that clear? Is that clear, friends? Thank you, Prashant. Yeah. Sir, whether Ind AS 1 is only applicable to standalone financial statement or it is also applicable to consolidated financial statement. So Ind AS 1 is applicable equally to all entities, including those entities which present consolidated financial statement. So it is applicable to standalone as well as consolidated financial statements. Right? Is that clear? Very good. General financial statement we have already covered. Ind AS, what is meant by Indian Accounting Standard? So Ind AS is also defined in Ind AS 1, which means Indian Accounting Standard converged with IFRS prescribed under Section 133 of Companies Act 2013. Friends, in Section 133 of Companies Act, Accounting Standard as well as Ind AS both are notified under Section 133, right? So accounting standard under companies AS rules 2021 and Ind AS under companies Ind AS rules 2015 as amended from time to time. So these both of these set of standards are notified under Section 133 of the Companies Act 2013, right? Materiality. Sir, is there any threshold given for identifying the materiality? Answer is no. Materiality varies from company to company. For example, Reliance Industries Limited, where the balance sheet is in crores, right? Rounding off is in crores, right? They don't mind 1 crore or 2 crore this side or that side, okay? So friends, they have a profit of let's say 40,000 crores, 30,000 crores, 20,000 crores, right? If their accountant has missed to record as expense of 2 crore rupees, how does it matter? Right? So you tell me, with the company which is having a profit of 30,000 crore, whether 2 crore will matter for them? Is it material? Answer is no. It is not material. It is just like a 2 rupees for them. Out of 30,000 rupees, it is 2 rupees for them. Is that clear? Is that clear, guys? Very good. It's what is meant by material. So material means standard says that an information is considered as a material if omission means not giving the information. Misstatement means wrong giving the information. So omission means not giving the information. Misstatement means giving the wrong information. Or obscuring means giving the scattered information. Means a main information has been scattered into bits and parts so that it will lose its gravity. And I have a very good real life example to explain the meaning of obscuring. Meaning of obscuring. What is the meaning of obscuring? Right? What is the meaning of obscuring? Friends, I hope my voice is audible and my voice is clear to all of you. Tell me if you find any problem in my voice. So, Radhika very rightly mentioned, omission means no information, misstatement means wrong information, or obscuring means scattered information. Very rightly mentioned. Great. Thank you. So, C is writing, omission means no information. Misstatement means wrong information. Obscuring means scattered information. Right? For example, a child whose exam has not gone very well or who does not have a good preparation in the exam, right? And he know that I will not be able to pass in my exam, right? You know how he is, how he is convincing to his parents. So one day after appearing in the examination, he'll come to his parent and he'll say that, Papa, the paper was very tough today. It was very tough. 50% of the students have exited the classroom within 1 hour. Right? I was sitting till 3 hours, but 50% of the students have exited the classroom. Even the invigilator was saying that paper is out of syllabus today. It was very lengthy, it was very tough, and everyone is saying. Then I spoke to my class teacher. He was also saying, no, this time paper is out of syllabus, right? This, that, right? Then after 3-4 days, he was saying to his father that, Papa, Rahul was also saying, I'm just taking an imaginary name, okay? I'm just taking a name. Or let's say Shushanta. Shushanta is also saying, Papa, he was also saying that he was not able to attend the paper and he was not able to clear his exam. Right. So what this guy is doing, this child is just scattering the information into bits and pieces because he know that he will not be able to crack the exam. Right? He'll not be able to crack the exam. So when the result will come and he will not be able to pass, probably his parents will not be more surprised. Why? Because he has already given the information into bits and pieces so that the information will lose its gravity. Right? If he would have given the information, every information at one place on the same day of getting the result, probably the impact would be little bit different. Right? The day when he came for exam, his father is consoling, don't worry, beta, just prepare for next examination. Because the result has not yet come. In between, when he was talking about that, his father was also saying that just pray God. Right? But when the result has come, and he was telling that I have already told you, right? And his father was also aware that his paper was not good, the paper was out of syllabus, the paper was not great, right? So friends, if a company is scattering the information, a big information in such a manner that it will lose its gravity, then it is known as obscuring of information, right? So they are saying that, okay, we have not omitted, we have not misstated, but they have obscured. So earlier in the materiality definition, this obscuring word was not there. This was inserted 2 years back. Right? Are you getting me? This was inserted 2 years back. So friends, standard says that information is considered as a material if omission, misstatement or obscuring would result in impacting the decision-making capacity of the user of the financial statement, then this information will be resulting as a material information. Right? Right? Is that clear? I hope you guys have understood the meaning of omission, misstatement and obscuring. Right? Now I'll give you an example to understand the meaning of materiality. I'll give you an example, right? What is meant by material? So friends, there is an investor and investor wants to invest 500 crore rupees in a company, in a textile company. And there are two textile company with a same scale, same operations, and everything is identical. Company A and company B. Everything is identical. and this investor is indifferent, and this investor is little confused that should I invest in company A or should I invest in company B. Now I'll give you more information, and you can see that the decision making capacity of the investor will change. Company A does not have any contingent liability, and hence company A has not disclosed any contingent liability, right? Company B has a contingent liability of 100 crores, but company B has not disclosed a contingent liability, or let's say 50 crores, but company B has not disclosed the contingent liability. Now you tell me, if the company B would have disclosed the contingent liability. So today, both the company does not have any contingent liability in the notes to accounts. Company A does not have, and that is why they have not disclosed. Company B has omitted to disclose this contingent liability. If company B would have disclosed this contingent liability, whether it will impact the decision-making capacity of the user of the financial statement, answer is yes. Now this investor will be able to take a decision whether I should go for company A or I should go for company B. Still, if he wants to go to company B, he would negotiate more with the promoters or management of company B. That see, your company has a contingent liability as well. We don't know whether tomorrow there will be exposure in the balance sheet of the company, right? So in lieu of 500 crore, I'll not be happy with 10% stake. I will be needing 15% stake, or for 10% stake, I'll not investing 500 crore rupees. I will be investing 400 crore rupees or 450 crore rupees, whatever it is, right? Are you getting this example? Are you getting this example? Is that clear? Is that clear to all of you? Whether this contingent liability will be considered as material, answer is yes, it will be considered as material. Right. Reliance Industries Limited accountant has forgot to record an expense of rupees 2 crore in the P&L account, in the profit and loss. Is it material? Whether the decision-making capacity of the user of the financial statement will be changed. Instead of 36,000 crores profit, if it would be 35,998 crores profit, whether it will change, answer is no. Right? So this 2 crore omission of expenses has not been material, right? So this materiality definition is a subjective definition. It is not an objective definition. It is not a threshold based definition. It is a subjective definition, right? Purpose of financial statement. We have discussed that the standard talks about that, the component of the financial statement provides a structured presentation of financial position, which is your balance sheet, your financial performance, which is your P&L, and your statement of changes in equity, and your cash flow position, which is your statement of cash flows, right? And of course, notes to accounts will provide you the detailed breakup, disclosure, and other aspect of your balance sheet, P&L, and statement of changes in equity and cash flow statement, right? Is that clear to everyone? Students, are you getting me very clearly? Are you able to understand the things? Do you have any doubt? Are you enjoying the session? Great. Great. Thank you so much. Yeah. Now let's discuss a very important aspect, component or complete set of financial statements. So this part we have discussed that first one is balance sheet, right? And how this Ind AS balance sheet is different from AS balance sheet. The AS balance sheet will start with equity, then non-current liability, then current liability, then non-current asset, then current asset. But Ind AS balance sheet start with non-current asset, then current asset, then equity, then non-current liability, then current liability, right? And apart from, in addition to the classification of items into current and non-current, the standard requires, or the schedule 3 requires, to bifurcate the item between financial and non-financial as well. Between the financial and non-financial as well, right? Is that clear? Okay. And few nomenclatures are different from the nomenclatures or the wordings which were used in the accounting standard financial statement, right? For example, in Ind AS financial statement, we were showing the word other equity instead of reserves and surplus, right? Because this other equity aspect is bigger than reserves and surplus. Second, on the face of the balance sheet, we are showing the word cash and cash equivalent, right? Whereas in AS balance sheet, we were showing cash and bank balances, right? So cash and cash equivalent we were showing. So likewise, we have a different, a few terminologies are different in comparison to accounting standard, right? The statement of profit and loss, this is a second component, and we have discussed that in the statement of profit and loss is much bigger. It is more elaborative. It is more large in comparison to accounting standard statement of profit and loss. And why it is there? Because this statement of profit and loss is having an additional section of other comprehensive income, OCI, other comprehensive income. Do you remember I have shown you this other comprehensive income? We will be discussing in detail in this particular Ind AS, but I have shown you this other comprehensive income in statement of profit and loss, right? Statement of changes in equity. I've shown you the statement of changes in equity. It's a separate statement. Why it is considered as a separate component? Because the statement of changes in equity is signed by the statutory auditor as well as board of directors as well, right? You can just open any annual report of a listed company and you will find the statement of changes in equity has been signed in a similar manner and in similar fashion like balance sheet, P&L and cash flow statement, right? So statement of changes in equity is nothing. It's your movement in equity share capital and movement in reserves and surplus, which is other equity, right? And the format is given in the schedule 3. The format of balance sheet is given in schedule 3. The format of statement of P&L is given in schedule 3. The format of statement of changes in equity is given in the schedule 3. The format is not given in Ind AS 1. So Ind AS define this as a component, and in Ind AS the guidance is given what should be the minimum line item, right? But the tabular format is not given in Ind AS, it is given in schedule 3. So that has to be followed, right? Statement of changes in equity is Rahul. Other comprehensive income I will explain when I'll reach to the other P&L section. Okay, I will explain that. Statement of changes in equity, we have discussed cash flow statement. Of course, statement of cash flow is just like whatever we were preparing under GAAP, under accounting standard, we were preparing. So it is just like that only. Notes to account. Notes to accounts will cover your significant accounting policies and explanatory notes, right? Friends, on 31st March, companies Ind AS rules 2023 has come, and there are some amendments in companies Ind AS amendment rules 2023, but those amendments are not applicable for November 2023 examination, right? It is not applicable for May 2023 or it is not applicable for November 2023. Don't worry about those March 2023 amendment, right? In your May 2023 or in your November 2023, the amendments related to the amendments till 23rd March 2022 will be applicable in your examination. Otherwise, the recent amendment is not applicable in your examination, right? Is that clear? I hope it is clear to all of you. Okay. So significant accounting policies and explanatory notes to accounts, which includes breakup, which includes the breakup of every line item of balance sheet, profit and loss, right? Your breakup of share capital, your promoter shareholding, your 5% or more shareholding, right? These kind of disclosures are required to be given. Okay. Then friends, related party disclosure, capital commitment, contingent liability, exchange difference, actuarial valuation disclosures, right? So segment related disclosure, segment reporting. So these kind of disclosure are also part of notes to accounts, right? So these are also part of notes to accounts. Is that clear? Comparative information, and you have seen that At least 1 year comparative is required to be given in the notes to in the balance sheet, P&L, cash flow, and other things, right? It's a very important aspect. So this part we have discussed. Balance sheet, we are aware, right? Statement of cash flow, we are aware. Statement of P&L, changes in equity, cash flow, notes, we are aware. Comparative information, we are aware. But a new and a very important section. What is that? A balance sheet as at the beginning of the earliest comparative period. A balance sheet as at the beginning of the earliest comparative period. In addition to two balance sheet, that is current year balance sheet and comparative year balance sheet, third balance sheet is also required. What is that third balance sheet? A balance sheet as at the beginning of the earliest comparative period. For example, current year. For example, current year. What is the current year? Current year is financial year 22-23. For financial year 22-23, what is the date of balance sheet? 31st March 2023. What is the comparative year? What is the comparative year? Financial year 21-22. 31st March 22 is the balance sheet date, right? Is that clear? Is that clear or not clear? Current year is financial year 22-23. Balance sheet date is 31st March 23. Comparative year is 21-22. Balance sheet date is 31st March 22, right? I hope this is clear. Is that clear? Okay. Now, friends, a third balance sheet is also required. What is the third balance sheet? The balance sheet as at the beginning of the earliest comparative period. What is the earliest comparative period in this case? The earliest comparative period means comparative period, right? Just for the sake of understanding the comparative year. What is the opening date of the comparative year? Please tell me, what is the opening date of comparative period? What is the opening date of comparative period? Very good. It is 1st April 2021. 1st April 2021, right? 1st April 2021. So friends, Ind AS 1 defines the component or complete set of financial statement as balance sheet, P&L, statement of changes in equity, cash flow, notes to accounts, comparative information, of course, needs to be given, and a third balance sheet. What is the third balance sheet? The balance sheet as on the opening date of the comparative period. Like in this case, it is 1st April 2021. But sir, why and when? When this third balance sheet is required? When the opening balance sheet of the comparative period is required? The opening balance sheet of the comparative period is required when the company is changing the accounting policy retrospectively. When the company is changing its accounting policy retrospectively. For example, the company changing the inventory valuation method from FIFO method to weighted average method, right? Then it has to apply the change in accounting policy retrospectively, right? It has to change its accounting policy retrospectively. So whenever the company changing the accounting policy retrospectively, or when the company is correcting a prior period error, right? The company is correcting a prior period error retrospectively, then the company has to give the third balance sheet, right? The company has to give third balance sheet. Sir, what is the objective of the third balance sheet? So when third balance sheet is required, when the opening date balance sheet of comparative period is required, it is required when the company is changing the accounting policy retrospectively, or when the company is correcting the prior period errors, okay, or when the company is reclassifying any item in the financial statement. For example, earlier the company has netted off some item in the current assets. Now the company is showing that item in the current liability, right? So if the company is doing a major reclassification, the company is doing a correction or the company is changing the accounting policy retrospectively, then third balance sheet is required. Sir, understood. What is the objective of this? Now, let me explain you the objective. Friends, in the current year, the company has decided to change the inventory valuation method from FIFO to weighted average method, right? What is FIFO? First in, first out. It means whatever inventory comes first, it will go out first, right? Means your closing inventory will only be related to the latest purchases. What is the weighted average method? Weighted average method means whatever purchases you have done, you have to calculate the weighted average rate and you have to apply that weighted average rate for the closing inventory, right? After sales. So friends, in the current year, you are presenting the balance sheet for the first time. Of course, you will correct that. But since you are changing this accounting policy, the comparative number of inventory is also at FIFO basis. You have to restate the comparative as well. Now you tell me, in your closing inventory on 31st March 2022 in this example, right, also belongs to the purchases which have been done prior to FY 21-22. Let's say the company has purchased a stock in 1920, 2021. So this closing inventory belongs to those stock as well, right? So friends, in this case, you will not be able to calculate the weighted average, the inventory valuation as per weighted average method on 31st March 22 until and unless you will correct the opening number. You will correct the opening number of 1st April 2021. What is the opening number of 1st April 2021? It is nothing. It's a 31st March 21 number. 31st March 21 balance sheet will become the 1st April 21 opening balance sheet. You understand? रात को 12 बजे 31 मार्च 23 का जो ओपनिंग बैलेंस, जो क्लोजिंग बैलेंस होगा वो 1 अप्रैल 23 को ओपनिंग बैलेंस बन जाएगा. Is that right? Have you understood this? It means first the company has to restate 31st March 21 inventory as per weighted average method. Now for FY 21-22 opening number have been restated. Now company has to restate 31st March 22 number and now 31st March 23 number. So what is the objective of this? The objective is to restate, to correct the opening balance, of that particular inventory, and the next impact will go to the retained earnings, right? Second example, the company has made an error, right? What error? The company was supposed to record a salary expense of, or let's say other expense of 20 crore rupees, right? And that expense belongs to financial year 1920. Okay. So if the company would have correctly recorded that expense, what happened? The entry would have been salary expense, sorry, other expense account debit to expense payable. So current year, of course, the company will correct. The previous year, the company will restate because the comparative is required to be given. But in this case, the standard says that you need to correct your opening balance also to correct the comparative closing balance. Right? So standard says that whatever impact of error was there, whatever impact of change in policy was there, the cumulative impact till the opening balance of the comparative year, till the opening date of the comparative year, the cumulative impact has to be taken and shown in the opening balance sheet, right? Have you understood this fact? Have you understood this fact? If not, you will be able to understand more in detail. So let me open my Excel file. Are you able to see this Excel file? Are you able to see this Excel file? Okay. And now you will be able to understand, and I'll show you the real life example as well in this, right? So friends, A Limited purchased a machinery for rupees 1 lakh on 1st April 2016, having a useful life of 10 years, right? Having a useful life of 10 years. The accountant has wrongly passed an entry of rupees 10,000 instead of rupees 1 lakh. Okay. So friends, on 1st April 2016, A Limited has purchased a machinery and it was at 1 lakh rupees, the correct entry should have been machinery account debit to cash account by 1 lakh rupees, but the accountant has wrongly passed an entry of 10,000 rupees. Machine account debit to cash account 10,000 rupees. So in this case, cash was overstated by 90,000 rupees and machine was understated by 90,000 rupees, and cost wrongly booked by 10,000 rupees. Right? This error was found when Ravinder was auditing the financial statement of A Limited for FY 2021. Right? You are required to suggest the correct accounting treatment in light of Ind AS 1 and Ind AS 8. Right? So the same treatment is there in Ind AS 8 also. So Ravinder was auditing the financial statement of FY 2021. He found that this error was happened in financial year 16-17. Right? In Ind AS, like in Indian GAAP, there was no requirement of restating the comparative. There was no requirement of presenting the third balance sheet. In AS, in IGAP, only you need to write in profit and loss account, you have to write impact of prior period error as a separate line item. You will show the impact in the current year and your life will become easy. But in Ind AS, if there is a correction of error, there is a change in accounting policy, the life will become pretty complex. Why? Because you have to restate your comparative period and you have to give the opening of the comparative period balance sheet as well, so that your opening balance of the comparative period will be corrected, and you have to give a lot of disclosures. What disclosures? I'll tell you. Right? So friends, in this case, now the CFO is asking Ravinder that, Ravinder, what entry we need to pass? How we have to show the impact of this error? So now Ravinder is explaining them, and see how Ravinder is explaining. Alok Garg is not explaining, Ravinder is explaining. Just listen from the mouth of Ravinder. So Ravinder is saying to CFO that, Mr. CFO sir, actual cost of machine is 1 lakh rupees. You have purchased on 1st April 16 and useful life is 10 years, right? Sir, you would have correctly recorded the number as 1 lakh rupees. What would be the depreciation? The depreciation which should have been charged is at 10,000 rupees, right? So 1 lakh divided by 10. This should be 10,000 rupees for 16-17, 17-18, 18-19, 19-20. 20-21 is a current year, okay? For last 4 years, the financial has already been published. But sir, the actual depreciation which you have charged only 1,000 rupees, which is 10,000 divided by 10, right? For 16-17, 17-18, 18-19, 19-20, 20-21, Ravinder has detected the error, and 20-21 number is yet to publish, right? It means last 4 years, there was a deficit of 36,000. There was a 36,000 of depreciation which was short charged. If this would have been correctly charged, the retained earning would be lower by 36,000, right? The profit will be lower by 36,000, right? The tax provisioning will also be impacted with this, right? Is that clear to everyone, or it is not clear? Is that clear to everyone? Yeah? Okay. Yes. Now, Ravinder is saying, sir, first of all, current year is essentially a 2021. 31st March 21 balance sheet is required since this is an error, and I am assuming this is a material error, right? So this kind of treatment is only applicable for the material error. Comparative year is financial year 1920. The balance sheet is on 31st March 20, right? Opening of the comparative is 1st April 2019. 1st April 2019. Ravinder is saying, sir, first of all, you need to provide, of course, current year balance sheet. The comparative year balance sheet, which we have already published, right? We are not touching that published balance sheet. The comparative number which we are presenting in the current year financial statement, we have to restate those comparative also, right? And the comparison is apple to apple. Sir, we need to correct the opening balance sheet of the comparative period also. Means we have to correct the 1st April 2019 balance sheet as well. Opening balance as well. What does it mean? It means we have to take the impact of financial year 16-17, 17-18, 18-19, and the total impact of 3 years till 31st March 2019. This we have to take on 1st April 19, and we have to show the correct number. Comparative number we need to restate, and current year, of course, we need to provide. Right? This is how we need to correct this error. Then CFO is asking to Ravinder that Ravinder, please do all the calculations. Then Ravinder is doing the calculation. Sir, balance of machinery as of 31st 2019, the gross block is 1 lakh. If I would have done the correct treatment, my gross block will always be 1 lakh rupees. The accumulated depreciation for 3 years would have been 30,000 rupees. My net block on 31st March 2019 should have been 70,000 rupees, the correct net block, right? It should be 70,000 rupees. But since I have made an error, my existing gross block is 10,000 rupees. My existing accumulated depreciation till 31st March 19 is 3,000 rupees. And my wrong net block is 7,000 rupees. What is the difference? What is the difference? The difference is 70,000 minus 63,000 rupees. It means on 1st April 19, what accounting entry I need to pass? And I need to pass in the current year itself, taking the last year. I don't need to reopen the last year books. I need to pass in the current year, but of course, impact has to be taken in the comparative and the third balance sheet, right? What accounting entry I need to pass? I need to pass machinery account debit, machinery account debit. By how much amount? 7,000 is the wrong net block. It should be 70,000 rupees. So I need to debit the machinery account by 63,000 rupees, right? And my cash is also wrong. Earlier, the cash should have been credited by 1 lakh rupees, but it has been credited by 10,000 rupees only. I need to do 2 cash account. By how much amount? 90,000 rupees, because my cash is undercharged. Cash was overstated by 90,000 rupees, so I have to credit 90,000 rupees. And what is the depreciation which I have short charged last 3 years? 9 3s are 27,000 rupees, right? My retained earnings would also be corrected. Retained earnings will also be corrected by, because my profit goes to retained earnings, right? It is also to be corrected by 27,000 rupees, right? Your numbers are telling 90,000, 90,000, okay? Right? This is total of your journal. Is that clear or it is not clear? Right? Is that clear? What accounting entry I need to pass on 1st April 19? I need to add 63,000 in my machinery account, in my PPE. I need to reduce 90,000 in my cash account, right? Minus 90 plus 63, how much? 27,000 negative. I need to reduce my retained earning by 27,000, right? My balance sheet is telling. So I have restated these 3 numbers in the opening balance, right? Is that clear to everyone or not clear? Is that clear to everyone or it is not clear? It is very important concept, guys. It is very important concept. Is that clear? Yeah. Its balance sheet number are always, P&L numbers are not carried forward, but balance sheet numbers are carried forward. So once I have made this entry, April 19, it will flow to this year and this year as well. It means I have to pass an incremental entry on financial year 1920 also, in FY 1920. FY 1920. It means 31st March 20, I need to pass an accounting entry. What is the accounting entry I need to pass? Financial year 1920. So I have already covered the impact of these 3 years in the opening balance sheet. Now for the last year, I need to correct the depreciation as well, right? So what I need to do, depreciation account debit. So the depreciation have been short charged by 9,000 to, to accumulated depreciation, or I would say machinery account, okay? By how much? By 9,000 rupees. Okay. So journal will tally 9,000, 9,000. Is that clear? What I'll do, my last year P&L will be restated and my depreciation will increase by 9,000 rupees and my profit will be decreased by 9,000 rupees, and 6 plus 63 minus 9. So at this point of time, how much impact will be there? So plus 63 minus 9. So plus 54,000 impact will be shown in the balance sheet, right? So when you compare your last year published balance sheet with the restated comparative balance sheet, you will find a difference of 54,000 in the comparative date. Your cash, same 90,000 will flow. This was an error. When you compare your last year published balance sheet with the current year restated balance sheet, you will find a difference of 90,000, right? So this will also flow in the last year. Minus 90 plus 54, what is the difference? 36,000. And you can see in the last 4 years, how much depreciation is short charged? 36,000. So you will find the difference in retained earning by 36,000. Is that clear? Your current year will not be restated. It is a current year itself, right? Is that clear to all of you? So friends, in Ind AS, if there is a material prior period error or there is a change in accounting policy retrospectively, the company has to restate the comparative number and the company has to give the third balance sheet as well. The third balance sheet means the balance sheet as on the opening of the comparative period to give a cumulative impact till the opening date of the comparative period. And this is how this has to be done, right? Sir, the impact is not material. For example, in the example of Reliance, the accountant has forgot to record 2 crore rupees of expenses. In that case, nothing is required. That prior period expense has to be treated as a current year expense and the entry has to be passed in the current year itself in the respective head, right? Sir, like in IGAP, in schedule 3 format in P&L, the separate line prior period expenses was there. Is it required in Ind AS? Also answer is in Ind AS, you have to restate every line item of balance sheet in P&L wherever applicable in the comparative period, and you have to give the third balance sheet and some disclosure also. What disclosure? I'll show you, right? Is that clear? Sir, whether the impact will be on the tax, on the provision of tax as well? Answer is yes. For the sake of simplicity, I have not given, but yes, the impact will be there in the calculation of deferred tax as well, right? Sir, whether the impact will be on the income tax return as well? गलतियां तो अकाउंटिंग स्टैंडर्ड आई गैप में भी होती थी ना. सो इनकम टैक्स रिटर्न आप कंपनीज एक्ट के हिसाब से फाइल नहीं करते. इनकम टैक्स रिटर्न आप इनकम टैक्स एक्ट के हिसाब से फाइल करते हो. सो देयर इज नो चेंज इन द इनकम टैक्स रिटर्न पर से, राइट? वी आर ओनली टॉकिंग अबाउट अकाउंटिंग एंड रिपोर्टिंग. इज दैट क्लियर? सो फ्रेंड्स, let me show you a real life example which you will enjoy also. So please confirm if the ONGC limited balance sheet is visible. I'm showing you the ONGC limited balance sheet. Whether the ONGC limited balance sheet is visible. Is this visible? Is it visible? So friends, Infosys has implemented Ind AS in financial year 16-17, right? But you can see that 31st March 2020 have given balance sheet, right? Current year balance sheet 31st March 20, last year balance sheet 31st March 2019, and 1st April 18 balance sheet, which is opening of the comparative period, right? And they have put a star mark on 1st April 18 balance sheet and 31st March 2019 balance sheet, right? Let's understand what is the meaning of this star mark. The meaning of star mark is restated note number 54. Restated note number 54. Okay. Is that clear? Friends, the P&L is not 3 P&L. It is only 2 P&L. Why? Because only balance sheet numbers are carried forward. P&L numbers are not carried forward, right? And for the last year P&L, they have put a star mark. And again, the explanation is restated, refer note number 54. Then they have given the cash flow statement, and the cash flow statement also for the comparative number, they have put a star mark. And what is this asterisk or star belongs to? It is restated note number 54. Let's go to the note number 54 and understand what is given here, right? Note number 54. Yes. In note number 54, disclosure as per Ind AS 8 and Ind AS 1, presentation of financial statement. I am showing you one of the Northern balance sheet, one of the public sector undertaking annual report, which is ONGC Limited. In accordance with Ind AS 8 and Ind AS 1, the company has retrospectively restated its balance sheet as at 31st March 19 and 1st April 18, which is beginning of the comparative period, and statement of profit and loss for the year ended 31st March 19 for the reason as mentioned below. Why they have restated the last year balance sheet, P&L, cash flow, and why they have given the third balance sheet? Because they have retrospectively changed the accounting policy of government grant, right? So I am not discussing what policy they have changed. I am discussing the concept of the restatement and third balance sheet, right? So you and me are not interested in what government grant policy they have changed, right? You and me are interested in understanding that what they have done in case of a change in accounting policy, right? Are we all aligned? Are we all aligned in terms of third balance sheet presentation, P&L, cash flow? I have shown you real life also, real life example as well. Yeah. Yes. Friends, they have given reason for that, right? And if you will see, they have given a reconciliation of balance sheet as on 31st March 19 and 1st April 18 as well. Why? Because whatever they have published in the earlier years, which is 31st March 18 and 31st March 19, so whatever previously reported, whatever is adjustment and whatever is restated, they have given line item wise. They have given line item wise balance sheet, right? And also they have given the note reference so that the user will be able to understand what change, what correction, what change the company has made. Similarly, they have given the reconciliation for P&L, right? What line item wise, what they have earlier reported in the earlier years, what adjustment have been made, and what is the restated number, right? Other income, inventory, production cost, depreciation, tax expense, profit, and even they have given the reconciliation, the adjustments of earning per share as well, the earning per share as well, right? Is that clear? Then they have given the reconciliation of cash flow as well, right? They have given the reconciliation of cash flow as well, right? What was previously reported, adjustment and restated. Then in the notes to accounts, they have given the line item wise impact and why change and what change, right? They have explained this kind of disclosures. So friends, you have seen that they have given the balance sheet, profit and loss, statement of cash flows, line item wise reconciliation from the earlier reported versus the restated number. Second, they have also given the reconciliation of earnings per share, and they have also given that what has been changed and what is the impact of the change in the every line item of the balance sheet, P&L and cash flows, right? I believe you guys are more comfortable after looking at the real life practicalities and real life examples of the Ind AS concept, right? Is that clear? Is that clear or not clear? It's a listed company annual report. It is available, Radhika, on when you Google ONGC annual report for financial year 1920, you will find that. Okay, it is available there, right? It is available there. So friends, now I want to conclude the session. So we have discussed schedule 3 today. We have started Ind AS 1 and we have discussed the objective, scope, and the important part, which is component or complete set of financial statement, including the concept of third balance sheet today with the help of an example in the Excel file and with the real life example of a big listed company, which is ONGC Limited for financial year 1920, right? Is that clear? Sir, this was the example of change in policy. Do you have any example of correction of error also? Yes. Hindustan Aeronautics Limited. If you will see the balance sheet of Hindustan Aeronautics Limited for financial year 21-22, which I have shown you today, right? So in that balance sheet, the correction of error has been taken, right? And they have also given the third balance sheet. They have restated the comparative balance sheet. They have restated the comparative P&L. They have restated the comparative cash flow. They have also given the line item wise reconciliation of what was reported earlier and what is restated, what is the impact of adjustment and why that is the impact, right? So thank you so much, guys. And tomorrow I'll complete this Ind AS 1, right? And I hope you have enjoyed the session today and you have understood things which are not only theoretical, which are practical in nature as well, right? So I'll wait for 30 seconds in case you have any query. Otherwise, I will be happy to conclude the session in the next 1 minute. So Lipika, I need to check with the Board of Studies. I don't have the right answer as of now that how many classes will be there because different faculties will take the class. I'll not take entire classes. So, but probably, the classes will be completed in the next 3 months, probably, right? So thank you, guys. I can see that there is no much query. Kishore is saying very much clear, sir. So thank you so much. Stay healthy, stay safe, stay happy, and we'll meet tomorrow to complete Ind AS 1. Thank you so much. Rahul, my email ID is caalokgarg@gmail.com. I'm not supposed to provide my contact number. You will find, please write down my ID. It's a caalokgarg@gmail.com. If you have any query, you can connect. You can reach out to me at caalokgarg@gmail.com or you can connect with Board of Studies for any queries. Okay. Thank you so much. Bye bye. Take care.